What's going on, folks? Welcome. You're live, Mr. Black. Doing a little chart analysis this lovely Saturday morning. For those of you joining us for the first time, if you want to learn more about trading at a professional level, feel free to ask any questions you have. Let me know any tickers, any currency pairs that you want to check out. Whatever it is you guys want to look at, let me know in the chat. And we'll check it out together. What's up, Joe? How you doing, brother? I gotta put up all my acoustic panels. It's echoey in here. What's up, Hannah? What's up, Brett? Snap and Tesla. All right, let's check it out. Alrighty, so whenever we start our analysis, guys, we always start from the same way. We start from a top-down analysis. Higher time frames first. Thank you, Benny. Good to see you too, man. Why? Because higher time frames tend to control lower time frames. So regardless of whatever type of trader you are, whether you're a day trader, swing trader, what's up, Paul? Thank you, man. Swing trader, scalper, whatever type of trader you are. I'm doing great, man. Just moved into the new place. My house is an immense pile of boxes, so it's been fun. This is the first live I'm doing from here. I'm hearing that I'm definitely going to have to put up some acoustic panels inside this room because it's super echoey, but I'm enjoying it so far, man. Trying new coffee. Trying this thing, 85 degrees. Never had it before. It's not bad. Yes, in lovely Austin, Texas. So we want to start at higher time frames first, guys, because higher time frames tend to control lower time frames. And if that doesn't make sense, you just think about it from this perspective. Think about the amount of capital you need to drive price action on a monthly level versus on like a 5-minute level, right? It requires a lot more money to move price action on a monthly level than on a daily level or on a 5-minute level. There you go, Benny. Well, I moved more because of my wife was tired of the cold, man. She wanted to, we were in Boston. She's like, all right, I want to move to someplace warmer. So here we are in a place that's much warmer. It's funny because we went to Florida, then we went to Massachusetts, and now we're down south again in Austin. There's no real best time frame to trade, Ralph. It's really what type of trade you're trying to take. I would say good general rules of thumb are that you always want to be looking at a minimum of at least 3 time frames when you're doing your chart analysis, because that gives you a really clear picture in terms of what's happening, right? But there's no like, oh, it's better to trade this and that. If you ask me in terms of my opinion on what retail traders fare better with at the beginning, I would say that retail traders tend to fare better with swing trading when they're in the learning process than with day trading, because day trading is a little bit more difficult. But what you will do is you will use different types of time frames for different types of trades. So if I'm like scalping in futures, that is very different than if I am swing trading in, equities. Does that make sense? So it's all relative to what you're trying to do, what type of trade you're trying to place, and what asset class you're trading. So different time frames for different types of trades. All right, so what am I looking for? First things we're looking for are institutional order flow. I'm looking for areas where banks and institutions are buying and selling. Now, why does this matter to professional traders? Why is this the first thing professional traders start with? IOF is the short form, institutional order flow. The reason we look at this first and foremost, guys, is because most major price movement, most major price action is driven by banks and institutions either getting in or getting out of the market. Does that make sense, everybody? It just requires a lot of capital to drive price action in the market. Because at the end of the day, we're on the monthlies right now, Brett. At the end of the day, what is price action? What does it mean when you see big green engulfing bullish candles? What does that actually mean is happening in terms of the market? That means there is an imbalance in order flow. Does that make sense? Price can only go up if there's an imbalance in order flow, the same way price can only go down if there's an imbalance in order flow. So when there are more buyers and sellers, more demand than supply, what happens to price? Price goes up. When there are more sellers than buyers, more supply than demand, what happens to price? Price goes down. Does that make sense to everybody? Give me a yes or a like in the chat if that makes sense to you. That is what price action is. It is simply a graphical representation of imbalance, right? When you have equal numbers of buyers and sellers, price consolidates. It forms basing candles, periods of equilibrium in the market. So what you're seeing happen right here is you're seeing sellers were in control, pushing price action down, and suddenly they hit this wall of buy orders. And for a brief period of time, buyers were buying and sellers were selling, but price itself was not really moving. But eventually there were so many more buyers and sellers here at this price point of, what is this, 10 bucks? 10.01, probably 10 bucks, let's be honest. So many more buyers and sellers that every single seller was exhausted and all we had left was buy orders. And when you have these imbalances in order flow, more buyers and sellers, price is going to go up. Everybody with me on that? Now the reason, how do we know this is a banker institution and not you or me, guys? Why is this a banker institution, not you or me? Barring, of course, some dramatic fundamentals. Why is that a bank and not us? I like the coffee, but it's strong, man. Whew. Even with my watered down iced coffee version, it's still strong. 100% Hannah, because we're not billionaires, right? Snap is a 14.85 billion market cap. For you to cause this level of price movement, you have to be placing a very large order. That's just the reality of the markets, right? You or I, even if we took our entire life savings and we said, I am all in, I'm putting every single penny I have to my name and I'm buying as much Snap as I can here at the price point of $10 at that limit price, we still wouldn't cause this level of imbalance. Does that make sense? We actually wouldn't even show up on the charts. That's just the reality of it. It just requires a huge, huge amount of capital to drive price movement. Is everybody with me on that? If we bought 100 shares of Snap, would that move the price of Snap? Not even a little bit. What if we bought 1,000 shares of Snap? Would that move the price of Snap? Still not even a little bit. What if we bought 10,000 shares of Snap? Would that move the price of Snap? Still not even a little bit. Because it's insignificant when you take the overall size of Snap. Snap's 14.85 billion market cap, right? It's a drop in the ocean. However, if a large investment firm, if a Goldman Sachs, if a Berkshire, if a JP Morgan, if a State Street, if a UBS, if one of these major investment firms comes along and decides to buy 10 million shares of Snap, will that move the price of Snap, guys? You're saying algorithmic trading, Jay Hill? If JP Morgan decides to buy 10 million shares of Snap, will that move the price of Snap? Oh yeah, you better believe it, right? You're talking almost half of all daily volume. What that's going to do is it's going to create a sudden and dramatic imbalance in order flow. Suddenly, out of the blue, there are way more buyers and sellers, right? And when you have imbalances in order flow, what happens to price? Price moves. So this is why professional traders, the first thing we look for is IOF, guys. We look for institutional order flow before anything else, because most major price movement is simply banks getting in or getting out of the market. That's how they drive price action. That's how they control price action in the markets. That's how they make their money, right? They move the market. And then what do the retail traders do? Retail traders see these big green candles, and what do they go and do? How do retail traders trade? What does YouTube teach you? What does ICT and what is called SMC and TJR? What do all these morons on YouTube teach you to do? Chase, baby. Chase that price action. Chase, 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 chase. Don't worry about being late. It's all good. Right? Momentum trade. Chase the breakout. We can check out NQ, man. And they chase price action, and they chase it where? They chase it right into areas where banks sell. And then they go, oh no, it moved the opposite of what I thought I was going to do. And then it starts coming back down. They go like, oh my God, time to sell. Look at this huge red candle. Now I know what's happening. It's going to go down. This is going to the, who knows how low this could go. We got to sell, 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 baby. And they sell white. Where? Right into where banks buy. And then they say, oh, big engulfing bullish candle. Time to buy again. And then they buy right into where? Where banks sell. And they're just always late to the move. Always late to the move. Always late to the move. Always chasing price and crossing their fingers that price action will continue to happen rather than actually buying where the banks buy and where the banks sell. Is everybody with me on that? So we're not going to do that. If you want to understand how professionals trade, we don't chase price action. We are not reactionary to price action after it's occurring. We identify these key levels where banks buy. We identify key levels where they sell. And instead of chasing the price action, what's up, Brian? Instead of chasing the price action, we wait for price to retrace to these levels to then see if we have an opportunity to buy and sell together with those financial institutions. Is everybody with me on that? I don't want to chase the price action caused by the banks and financial institutions. That means you're too late to the move. I want to identify these key levels, and then I want to have the patience to wait for price to retrace back to then see if we have an opportunity to buy and sell together with those financial institutions. Level 2 is just an accumulation of limit orders, Jay Hill. It can be fine as a confirmation. Be careful making any trading decisions off volume profile, level 2, OI, things of that nature, because just so you understand, banks are very well aware that retail traders look at that sort of stuff, and they will leave false orders that they will pull just to trap you. And this actually speaks to one of the most important aspects of the financial markets, which is this. When you are involved in the financial markets, guys, and you start trading, who are you trading against? Who is your opponent in this market when you start trading? Who are you trading against if you're going to trade off volume profile level 2i? And I'm not saying it's bad to look at a J-Hill. I'm just saying use it as a confirmation, not as a decision-making factor. 100% Fraser. You are trading against the banks. And this is something that people don't really understand. They think of it like this. They think like, what are you talking about, Mr. Black? The banks don't care about me. I'm poor. I only have a few $1,000s. I only have a few $100,000, whatever it is that you have. I only have a few $100s, whatever it is. They're like, I don't have money. And you're right. They don't care about you individually. You individually are insignificant, but they do care about the collective you. The collective you are worth trillions, right? And where do banks make the majority of their money? Off of retail traders. That's who they make their money off of. Over 80% of the profits that banks and financial institutions make in the financial markets are off of you. You are the target. So if you were unaware of that, you should be aware of that. They are not casually trading alongside you. They are actively trading against you. Does everybody give me a yes or a like in the chat if that makes sense to you? They are actively trading against you. And this is why so many retail traders get themselves into trouble. Because how do most retail traders try and learn to trade, guys? What do? What's the first thing retail traders do when they start trying to learn to trade? They go like, oh, I want to make money trading. Should I go and actually put any real effort into this? Nah, YouTube sounds good enough. Exactly, Fraser. Let me watch some videos on YouTube and learn about basic concepts of technical and fundamental analysis, and then I'll go start playing against professionals, right? And that's kind of like the equivalent of like, imagine if you watched a video on YouTube on how to improve your jump shot in basketball. And you're like, oh, okay, keep my elbow in, follow through, backspin, got it. And then you're like, I think it's time for me to go play against Michael Jordan one-on-one. And you know what? I'm going to put some money on it. I think I got this. Like, is that a realistic concept of what you're doing? Would you say making 10K a month as a retail trader is doable? Of course, J-Hill. You can make as much money as you want. There's no cap on what you can generate in returns in the markets. What matters is understanding how to trade the way the financial institutions trade, right? This is why professional traders, this is why we spend all our time on IOF, guys. It's because there's no point in fighting the banks. Fighting the banks is a waste of time. They have more money than us. They have enough money to move the market, right? They actually have enough money to move the market. And this goes back to what I'm saying. So if your level of knowledge is limited to basic concepts of trading, right? Yeah, indicators, support, resistance, Bollinger Bands, Elliott waves, moving averages, stochastics, RSI, Fibonacci retracements, volume, MACDs, VWAP, candlestick patterns, Ichimoku clouds. Unfortunately, now I have to say, just because it's so popular, fair value gaps. If this is all you know, guys, if this is all you know, this basic entry-level stuff, just understand that is very, very basic stuff, right? That's like kiddie-level stuff. Kindergarten of trading is what I call it. And there's nothing wrong with being in kindergarten as long as you understand and recognize that you're in kindergarten. Where people will get into trouble is they will go and spend days, weeks, months, years in kindergarten. They'll be like, I've spent the last 3 years in kindergarten. And then they'll think that because they've spent so much time, and nap time and recess and stuff like that, that they are now have master's degrees in trading. It's like, no. You just spent a really long time in kindergarten. That's all you've done. You are nowhere close to having a master's degree. And so they'll start trading off of these reactionary forms of trading. And then they'll say stuff like this. And you guys can back me up in the chat if you've ever had this sensation. They'll say stuff like this. They'll start placing some trades. They'll draw some lines. They'll throw some indicators on the charts. They'll place trades and they'll say like, man, I swear it's almost as if the market knows what I'm going to do. It's like as soon as I place a trade, it's almost as if there's a camera just looking over my shoulder, just waiting for me to place a trade. And then the market moves just enough to screw me out of the trade, knocks me out of the position, and then it goes and shoots off in my direction. Who's had that sensation before? I swear, man, the markets are out to get me. They're trying to get me. Every time I place a trade, it's like the market's just trying to screw me over. Anybody ever had that sensation? Sound familiar? Is that paranoia on your part? Are you just being crazy paranoid? Dude, nobody's out to get you. That's not paranoia. Of course they're out to get you. You're the easy money. That's where they make the majority, over 80% of the profits, guys, are off of retail traders. That's not paranoia. They're absolutely trying to get you. If you are going to trade in the most obvious manner possible against major financial institutions, expect them to target you. They will purposely push price through you in certain levels just to knock you out and take your money, because that's where they make the majority of their money, right? Well, that's what we're talking about here, Jay Hill. So technically, IOF is still a form of technical analysis. It's just not basic technical analysis, right? It's the way professionals trade. So there's nothing wrong with learning these basic things, but people ask me all the time, what indicators you like? And I'm like, dude, all that stuff's secondary. Indicators are meant for confirmation. That's all they're meant. That's all they were ever meant for, by the way, guys. They were never meant to be trading decisions. I understand that people on the internet try and promote indicators as trading decisions. Like, if it's an overbought, then you go and say, it's like, dude, no. That's not how any professional trades, right? Those are all secondary things that you use for confirmation, never a decision-making factor, because none of them work consistently. It all comes down to order flow. If Citibank, if some major financial institution decides to take a large buy position on Snap, price is going up, period. Because the markets are like anything economic. Economics 101, supply and demand. If they place a large buy position, that means there are more buyers and sellers. More buyers and sellers, price action moves up. Same way when there are more sellers and buyers, price action moves down. So what we look for is, instead of making our decisions off all this secondary stuff, indicators, support, resistance, chasing the price action, momentum trading, stuff like that, we're going to identify where the banks buy, we're going to identify where the banks sell, but we're not going to chase the initial impulse. All right? We're not going to chase the initial impulse. Instead, we are going to wait. We're going to wait for price to retrace back to these levels. And can everyone see how this comes within a whisper here? Is that a hit or not, guys? What's up, user? This is Snap, my man. Exactly right, Frazier. One juice point, exactly right. Yeah, we have to have common sense, guys. At the end of the day, like, I'm doing chart analysis and I'm trying to do my best to determine where the banks are buying, where the banks are selling. But is it possible that I'm off by a few pennies in my analysis? Is that possible? Of course it is. This doesn't matter the time frame, J Hill. Banks trade on all time frames. Banks trade on, they scalp, they day trade, they swing trade, they do it all. So it's always coming down to order flow. Order flow is the foundation of what you do. If you want to see more day trading at a professional level, Mr. Blue, one of the other Phantoms, he does a live on YouTube on Tuesdays and Wednesdays. He does more day trading. I primarily swing trade, but just to be clear, order flow works on all time frames. Would the other green candle count as another demand zone? This one over here, Hannah? Is this the one you're talking about? Sometimes, Joan. What you're talking about, Joan, is called fundamentals. Fundamental analysis. Yes. Yeah, and it still is, right? This is a retest of it. So it absolutely is. And if you take that into consideration, then we don't even need to adjust our zone, right? Because that one was already hit right there. It absolutely is. Now, why would I be more interested in this one than this one? Because the impulse out was stronger in this one. There was a greater imbalance here, right? But you're 100%. It absolutely is. So, getting back to what I was saying. So what are we going to do? We're not going to chase the price action. We are going to identify where the banks buy. We're going to identify where the banks sell. Instead of chasing the initial impulse, we are going to have the patience to wait for price to retrace back to these levels of institutional buying and institutional selling. And when it comes back into the zone, that's when we look for an opportunity to get into the trade so that we can together with the banks or sell together with the banks. Does that make sense, everybody? We're taking advantage of the bank's deep pockets. We're identifying where they buy and where they sell. And then if price retraces back to these levels, we see if there's an opportunity for us to buy and sell together with those financial institutions. Institutional order flow is smart. It's very important to make that distinction because there's tons of order flow in the markets, but all I care about is institutional order flow. It's the reason I always try and make the distinction of, like, sometimes people will say supply and demand, or sometimes they'll say order blocks, and I'll be like, well, All institutional orders are order blocks, but not all order blocks are institutional. Does that make sense? Like, for example, if the CFO of some company goes and buys 20,000 shares of the company, do I care about that? Not even a little bit. Is it an order block? Yeah, that's a significant order, but it's not an order that matters to me as a trader because they're not leaving. It's a very low likelihood that they're leaving behind a large portion of unfilled orders. But if Goldman Sachs comes along and decides to buy 5 million shares of that same, that's interesting to me because then there's a much higher likelihood of unfilled orders, right? Well, we're just on the monthlies right now, Jay Hill. So we're just on our higher time frame. We're going to be drilling down to lower time frame to then evaluate actual trades. We always do a minimum of 3 time frames in terms of analysis. So right now we're just on our HTF. We're going to drill down to an intermediate, and then we're going to drill down to a lower, and that's where we would actually be looking for real entries. So right now we're getting structure, right? Got to be aware of overall structure in the market. Even if you're a scalper, you should, even if you're trading like 5-minute candles, you should still be aware of monthly levels. You should still be aware of weekly levels. You should still be aware of daily levels. That's why if you ever watch, I don't know if you guys have ever watched like actual professional traders trading, they don't have a lot of stuff on their charts, but the things that they do have marked off are levels, right? Because imagine if you're like trading on a 5-minute chart and you're looking at 5-minute, 15-minute structure or something like that, right? And you decide, ooh, this is a great setup for me to go long, but you're going long into major monthly, weekly, daily selling. Which of those do you think is going to win? The lower time frame little long position or the higher time frame short position? Thank you, Jay Hill. Appreciate it, man. Yeah, the higher time frames, of course, because it requires a lot more capital to drive price action on a monthly level than on a 5-minute level, right? Those are 2 very different levels of capital. So always important to be aware of those levels, even if you are a scalper, guys. Don't ignore those higher time frames. Marking out, taking the time, and what does it cost you? An extra couple minutes? Those extra couple minutes will help you in terms of your consistency on those lower time frame trades tremendously. It makes a world of difference, right? It's a huge difference between people who are aware of what's happening on macro time frames as well as micro. So you got to be aware of everything. All right, so we have our monthly levels. Right? We're not going to chase the price action. We're going to identify what the banks buy. We're going to identify what the banks sell. We're going to wait for price to come back, and that's when we study an opportunity so that we can buy with the banks or sell with the banks, right? Especially that first hit, because the first hit is where we have the highest probability of order flow. What's up, Rugby? Well, we're going to drill down, my man. Yeah, we can check out SPY, guys. Let's just do one at a time. So there we go. We got Snap. Let's drill down to the weeklies. Yeah, man, we do teach people to trade. If you want to learn what it's like to be an actual Phantom member, I would recommend you learn more about how we trade first. I'm going to be teaching a workshop on Thursday at 7 p.m. Eastern. So if you'd like to actually learn more about it, go to our website. Here, hold on, I'll take you to it. Go to TradePhantoms.com, and you can register for free on our website. It's going to be at 7 p.m. Eastern on Thursday. And in that workshop, I will do a deeper dive in all these topics, guys. So I'll teach you more about how the markets really work, like what actually drives price action in the markets, because most people don't really understand how the markets move. How professionals trade. Just so you guys understand our background, all the Phantoms come from the pro side of the industry. So I don't want anybody to think we invented these strategies. These are not our proprietary strategies and blah, blah, blah. No, we just worked in the industry, guys. We were all trained to actually trade. We did it professionally, and so we teach people how we were trained, right? So if you want to learn more about it, we'll teach you more about how we identify order flow, how to trade together with the major financial institutions, because that's really the only way professionals trade, right? How to trade in all directions, whether the market is bullish, bearish, or consolidating. You have to learn how to trade in all market conditions. How to use leverage properly. Leverage is very important. If you've been afraid of leverage, that is not something you should be afraid of. That's like a chef in the kitchen being afraid of a knife, right? Leverage is a very powerful tool which allows you to reduce your capital exposure, reduce your risk, and actually generate higher rates of return. So very important to learn how to use leverage properly. The difference between all different asset classes, stocks, options, futures, forex, crypto, what they are best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it. And if you are interested in becoming a Trade Phantoms Pro member, if you want us to actually teach and mentor you and trade live with you, you will have a special opportunity to enroll at a discounted rate because we have a special promotion going right now for new members. So if that's something that interests you, you'll have that opportunity. Coursework is normally, yes, it's free now. The class is morning. Coursework is normally in the evenings, John. Live trading has to be during the trading day, but everything we do is recorded and archived and available 24 hours on demand. And because we take both swing trades and day trades, even if you are watching the recordings later on in the evening, you can still take advantage of a lot of the swing trades because they're not as time sensitive. Does that make sense? Genuine question, are you profitable and since when? I've been trading for 27 years, Jay Hill. I cannot tell you about profitability. It breaks federal law 15.USC.45. It's considered an earnings representation. So federal law prohibits traders who make any sort of compensation to make any sort of earnings or lifestyle representations. That's why you never see professional traders talk about that. Oh, Fraser, you already answered it for me. But if you want to read all about it, guys, so if you want an easy way to kind of distinguish between professional traders and fake traders, or people who pretend they work professionally, this is an easy way. Because if you ever actually worked in the industry, you had to go through compliance training. It's not a choice, it's required. You have to go through compliance training, you have to take a test showing that you understand what you're allowed and not allowed to say. I don't understand the question, Tyler. What do you mean? I don't quite understand what you're asking me. All right, so here I am on my intermediate time frame. While you're typing that out, let's keep going. And the first thing I'm going to evaluate on my ITF is I want to evaluate my trend. What is my trend? Yeah, we can look at it, man. What's my trend here on the intermediates? Is this an uptrend, a downtrend, or a sideways moving trend? What's happening here on Snap, guys? Up, down, or sideways? You guys tell me in the chat. Oof, it is strong. Strong coffee. No, be very careful if people make earnings representations, man. Just so you know, man, like, and I'm not trying, like, I don't really care about other people and how they go and do their things. But just to be clear, like, even if you know how to trade, right? Even if you're aware and you're good at it and you're successful with it, if you actually are a real trader, one of the things you know is how much work goes into learning to trade. Like, trading's not easy, guys. I know people on the internet will represent it as easy. I saw some guy telling people that they could teach, well, I saw some woman a couple weeks ago, like Forex for Women or something, saying she could teach people to trade in a day. Which is like, that's like the equivalent of telling someone, like, I can teach you to speak German in a day. You know, it's like, really? Well, that's amazing, but, you know, and it's just like, that's, I think most people with common sense recognize that that's not realistic, right? But there are people that are enticed. They go like, really? Oh my God, thank God I can learn this extremely valuable skill set in a day or a week or a month. It's like, no, dude, this takes time. This is one of the highest paying skill sets in the world, right? You're not going to learn it overnight. And anybody who makes that representation, to me, is very egregious in what they are doing. Because they're trying to misrepresent things just to get money from people in some sort of get-rich-quick scheme, right? And if you ever worked with any professional trader, like somebody who actually worked in the industry at a, you know, an investment bank, at a brokerage, at a hedge fund, whatever, ask them how long it takes to learn to trade. You will not see a single one of them tell you can learn in a week or month or anything like that because it's not realistic. It takes longer than that. It's just not even remotely realistic, right? Yeah, exactly. It's a profession, Smarter. The same way anything else. Like, what could you become professionally in a day or a week or a month? Could you become a doctor in a day, a week, or a month? A lawyer? An engineer? An architect? A nurse? Anything? This pays more than all of those guys. This is one of the highest paying skill sets in the world. Like, the idea that you're going to, like, casually pick it up off YouTube is preposterous. Because you would never try and become a doctor off of YouTube, right? You wouldn't be like, I watch a lot of videos on surgery. I think I got this. It's like, I don't think you got it, man. You should probably put a little more effort than that. You know? Like, it's just not realistic. So I try and put it like this to people. This is the good news I have for you. Trading is a very learnable skill set. It's not beyond anyone's abilities to learn to trade because trading is very, very process-oriented. It's very systematic. It's not what people think it is, which is very subjective. People think like we go with our gut and stuff like that. Not even a little bit. Trading is super, super process-oriented. When A happens to do B, when B happens to do C, when C happens to do D, and so on and so forth. So it's not beyond anyone's abilities to learn to trade because it is so systematic, right? It's a matter of learning all the steps and then having the discipline to follow all those steps every single time, regardless of how you feel. And that's probably one of the more challenging parts of trading is even when you learn proper structure, it's controlling the mental aspect of it. Mindset, emotions, right? Because those are things that really hurt people, especially if they're undisciplined. But If you want to think about it in terms of like the actual learning process, I put it more akin to learning how to play a musical instrument or learning how to speak a foreign language, right? Like if you wanted to learn to play piano, could you learn to play piano? Yes. If you want to learn to play piano, you could learn to play piano. If you watch me play piano for 8 hours, do you now know how to play piano? Oh, not even a little bit. But I watch you for 8 hours straight. Cool. You still have to actually go and practice. You're going to have to practice scales. You're going to have to practice your finger dexterity. You're going to have to practice chords. There's no shortcut to experience. And trading is no different, right? Now, if you go and you practice piano every day for the next 3 months, in 3 months, are you now a virtuoso piano player capable of playing with any symphony in the entire world? No, not even close. But if you practice playing piano every day for the next 3 months for like an hour a day, would you play piano better in 3 months than you do now? Yes. And that's the way I think of trading. Trading is progressive, and it's something where you can improve on it, but you have to put the time and effort in. And I'm not saying you need to make it a full-time job, guys. I trade for 30, 40 minutes a day. It's not what I spend most of my time doing. I spend most of my time doing nothing. That's why I do stuff like Phantoms, to keep myself occupied. But it is something where you have to be committed to actually putting it in. Right? Same way if you want to lose weight and get in shape, you have to go to the gym at least a few times a week. Everybody with me on that? Does that make sense? Exactly, Fraser. Can you explain how you draw your supply and demand zones? Yes, I can. Maybe, Big Ben. I suppose that's possible. All right. So, what's our trend here? This is a downtrend. Does everyone understand that it's a downtrend? We have impulse, correction, impulse, correction, impulse. We've broken past any sort of control point. This is currently a downtrend. So why does that matter to us, guys? Well, thank you, Randall. Why does that matter to us? Because we want to trade together with trend if we can, right? Our ideal situation is trade together with trend. Now, the problem is I'm in a downtrend, which means ideally I would like to go short, but where am I in the trend? I'm inside of much higher time frame institutional buying. So either I have to wait for a pullback, a retracement to a level of institutional selling, or I have to look for a counter trend trade. Does that make sense, everybody? And now it's not say, even though we like to trade with trend, does that mean we never take counter trend trades? No, not at all. It just means we prefer trend trades because they are high probability trades, right? For me to take a counter trend trade, everything has to be kind of in perfect alignment for me that to be a viable trade for me, okay? So here we are, we're on the weeklies, we have our trend, now we're gonna look at, same thing we always look at, IOF, institutional order flow. Where are the banks buying, where are the banks selling? Sure, Joan. Do I have any order flow here on the supply side? Well, I have this beautiful impulse, balance, impulse, area of institutional selling right here. Some big banker institutions sold and sold heavily here, driving price action downwards explosively on Snap. How do I know that's a banker institution, guys? You guys tell me in the chat. How do I know that's a bank? Why can't it be us? Why can't we have caused it? Maybe just a bunch of us got together in a Reddit thread and said, let's go sell some Snap. Yeah, it's a big impulsive movement, right? Big impulsive movement. Not on the weeklies, Randico, but yes on the lower time frames. But I like where your head is at. Big impulse movement, right? So what you're seeing here is some bank took a large sell position here. They filled some of their order, but did they fill their entire sell order? No, they couldn't have. If they had filled their entire order, price action would not have impulsively dropped down like that. It would have continued to consolidate and move sideways. Because when we have equal numbers of buyers and sellers, price consolidates. It forms basing areas, right? When you have impulsive movement, that represents imbalance in order flow. Everybody with me on that? Price can only go down if there's an imbalance of more sellers and buyers driving price action down. So if you want to think about this mathematically, don't make the mistake of thinking all big candles. It's all about structure, Cam. So it's not every big candle is going to be order flow. Some will be continuation, some will be retail traders chasing price action. Like this is a big candle, right? But this is not order flow here. Order flow is all the way down here. It actually came all the way from this demand zone, causing that impulse out. Does that make sense? So I don't want to make the mistake of thinking every big candle is order flow because it's not. Yep, we're going to look at fundamentals when we drill down to the dailies. Cool. So we'll get into earnings and stuff as like that as well. So they placed this large sell order, but they only filled part of the order. And that's the norm for banks, guys. That's not a rarity for banks. Banks place very large orders. They're not buying hundreds of shares or thousands of shares. They're buying millions of shares, millions of contracts, millions of lots, huge, huge positions, right? But the markets are like anything economic. For every buyer, there must be a seller. For every seller, there must be a buyer. So if you are a major financial institution, let's say you're a State Street, and you decide you want to buy, I don't know, 10 million shares of Snap at the limit price of $9.35, right? Just because State Street wants to buy 10 million shares of Snap at $9.35, does that mean there's going to be 10 million sellers just sitting there waiting for them right at that limit price, just ready to sell it to them right when they place the order? Is that a very likely occasion? Keep watching Dudzinski, and I'll show you what we're looking for. Is that a likely occurrence, guys? There will be 10 million sellers. Oh, wow, thank God, State Street, you came along. We've been waiting for you. 10 million sellers just sitting there. Almost half of all daily volume sitting at one price. No, that's incredibly unlikely. It normally takes banks months, sometimes years to fill their orders, guys. So what happens to institutions, they place these massive orders and they fill some of their order based on what's available in the market. Does that make sense? So State Street wants to buy 10 million shares, but when they place the order, there are only 5 million sellers available. So how much of their order can they fill? Half. You can only buy what's available. The same way you can only sell what's available, right? So what we do, well, right now we're just looking at equities. You could do an options trade on it. No, there's no way of doing it as an indicator, CAM-BAM. People have tried doing it. So support and resistance is different than order flow, CAM-BAM. Sometimes they will coincide, but a lot of times they won't. So it is very important to understand the distinction between the two. Like, for example, there's no way you could possibly define this as resistance, right? But it is a continuation pattern. It is an area of institutional selling. So very important to understand the distinction between the two. Another reason to understand the distinction between the two is who likes to trade around support and resistance, guys? We'll check out SPY afterwards, man. We're just finishing up here, Snap. Who likes to trade around support and resistance? Who's into that? Who's like, I love support and resistance? Yeah, retail traders love support and resistance because it's probably one of the easiest things to learn in the world, right? It's so easy. Like, how long does it really take you to understand the concept of support and resistance? 5 minutes? Like, oh, tops and bottoms? Well, that's easy. It's like, that is easy. You are correct, sir. That is incredibly easy. You might almost say that's too easy. Right? And if we go back to what I said before, if banks know that retail traders love support and resistance, right? Then and banks make the majority of their profits off of you guys. Over 80% of the profits that they make in the financial markets off of retail traders. If they know that you love trading around those levels and they make the majority of their money off of you and they have enough money to move the market, do you think they could purposely push price through levels where you're trading just to knock you out and take your money? What do you guys think? Think that's a possibility? Oh, you better believe it. They love doing liquidity grabs, right? Happens all the time. Yeah, Cam, exactly right. There's only one way to trade, which is with the banks. That's the answer. If you want to learn to trade, you have to learn to do what the professionals are doing. If you're not willing to learn to do what the professionals are doing, don't bother trading. Because there's a reason there's such a high failure rate amongst retail traders. If you guys don't know the statistics, 97 to 98% of retail traders lose money over time. And if you're thinking I'm secure with my retirement account, like that includes 401ks, IRAs, TSPs, 403bs, guys. Those purely bullish retirement accounts, same thing. 97 to 98% of you are losing money in those as well. You just don't know how to read your statements properly, right? So that's the reality of it. It's a very high failure rate amongst retail traders because they all trade the same way. They're reactionary to data. They chase price action after it happens. They don't really take the time to learn to do it properly. They look for shortcuts, right? So if I just throw this indicator on and then when it goes below this line and it hits this indicator, then I buy and then it goes above this and I sell, then I sell. It's like, no. You're not picking it up in 5 minutes. Stop thinking that way. Stop trying to get rich quick off trading. This is a skill set. If you're not willing to take the time to learn the skill set, that's okay. That just means trading's not for you, right? But if you're going to get involved in financial markets, you have to learn to do what the banks do because they're the ones who control the markets. Everybody with me on that? Does that make sense? Give me a yes or a like in that chat if that makes sense to you. Good, good, good. So you want to trade together with the institutions. All right. Anyway, here's the deal, Hannah. This looks horrible. Look at this. Ugh, ugh, ugh. Is there anything I really want to enter here? No. Even this little continuation here, already been retested, looks terrible. It's not giving us any structure that justifies. We have this little level right here, but you got to think this level is a retest. Oh, dude, that's the worst, Warrior. Those are the ones that, like, if you want me from somebody who actually worked in the industry, the ones, and no offense to anybody who's a broker, because I don't think brokers are necessarily poorly intentioned. Most brokers are just ignorant of what trading actually is. Just so you guys know, like, brokers for the most part don't trade. I don't know if you guys know this. Brokers are basically salespeople. It's just another word for a salesperson. So when you go and hand your money over to a broker, just because they have a Series 6, Series 7, that doesn't mean they know anything about trading. That means they know the legalities surrounding what they are allowed and not allowed to do with your money in the financial markets. That's not the same as knowing how to trade. Does that make sense, everyone? Those are two very different things. To the point that, do brokers ever trade for investment firms? Are they involved in any trading of the investment firm's money, guys? Nope. 0%. They have no involvement. They are front-facing sales to the public. They are not involved in trading for the company at all. They're not involved in decision-making factors for trades for the company. They're not consulted. Their opinion means nothing to the company as far as what the company is going to do with its money. What they are involved in is bring cash in from retail traders, stick them into mutual funds that give us the best commission, and then tell them to not touch it, right? If you lose 20, 30% of your 401k because the market retraces, because 401ks, for those of you who don't know, are purely bullish retirement vehicles. They only make money when the market's going up. If you have a retracement, market pulls back, right? Correction. Now, a lot of people are afraid that we're having a correction right now. If you have a correction and the market pulls back 10, 20, 30%, what happens to your 401k? You lose 10, 20, 30% because it only makes money as the market goes up, right? If you call up your broker, like let's say right now, let's say you called up your broker next week and you say, man, I don't know, I'm nervous about what's happening with the market. I'm worried that we're going to have a start to a crash. I just want to pull out my money, leave it in cash in my 401k, take me out of the market for now. When the market turns bullish again, I'll get back in. Is your broker going to be like, excellent decision, man, let me get that taken care of for you right away? Absolutely, we want to be more certain times before we be involved in the market. Is that what they're going to tell you? 100%, man. Protect your downside. Let's leave it in cash in the 401k. I don't know if most people don't even know they can go to cash in the 401k. No! They're going to be like, no, 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 no. You don't want to do that. No, no, no. The market ebbs and flows. It moves in waves. That's just the nature of the market. You don't want to do that. It's going to come around. Just wait it out. In fact, what you might want to do is dollar cost average in. I know I'm losing money for you right now, but what better time than to give me more money? Right? Give me more, so I'm losing your money. Pay me more for the privilege of losing your money. And then, when the market turns around again, you'll make your money back more quickly. Does that sound familiar? Buy the dip, 100%. My boy, if you want to understand proper wealth management, there's nothing wrong with using bonds, but proper wealth management is actually across multiple asset classes. And when you're doing what's called diversification, that should be across multiple asset classes, ideally purposefully creating inverse relationships. You can sit in cash in your 401k with no penalty because you're not taking it out of the 401k. If you take money out, then you have to pay. But you can leave it in cash in your 401k, IRA, TSP. It's not only a choice, it's required by federal law. They have to have that option for you. Now, you'll notice brokers don't really promote that concept, right? They're not big fans of it. They're like, no, 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 let's not tell people about that. But you are allowed to do it. It is entirely your choice. Wow, that's bold, Bob. That's a bold claim on his part. I wonder where he came up with that mathematically, because I've never seen the market go up 80% in a couple days. I like his thought. Show me those days, man. I'm very curious which days you're looking at on the charts. Remember when the S&P went up 80% over 5 days, guys? Can't say I've ever seen that happen. Dude, that's I believe. Now, I've never been a broker, guys, but from what I remember, I did get a Series 7 because at one point they wanted me to be a broker. From what I remember, I don't think that's compliant, man. I don't think you can even legally say that. Oh, dude, the whole goal is to get you into something that pays commission. And to be clear, guys, like I've had people say, like, are you telling me my old college roommate who manages my money has been screwing me? I'm not telling you that. I'm telling you that most brokers don't know anything about trading. They are told by higher-ups that this is what you're supposed to do to manage a retirement account, and then they regurgitate the information given to them. So to be clear, it's not necessarily malicious, it's just ill-informed, right? And if you really want to understand this, think about it from this perspective. Banks tell you buy and hold. Is that what banks and financial institutions do with their money? Does anybody think that's what they do with their money? They are publicly traded, so you can actually see what they do with their money. Is that what they do with their money? Do they just leave it there, buy and hold, ride the huge losses down, wait years to make it back? Nope. They don't do that. If it's so good, why don't they do it? If it's such a great strategy, why do they do it? Most brokers don't make a lot of money, Warrior. Starting salary for most brokerages is like $80K, and most of them, if they get anywhere, it's like maybe $100K, maybe $150. They don't make a lot of money. Most of them, the best they ever get about $100K. If you have good connections, like I'll tell you, at the firm where I worked, one of the guys. Well, fair enough. I'm saying in terms of, I'm sorry, because that just might be my perspective. I don't think of that as a lot, because most people living with 80K are living paycheck to paycheck, right? So like I try and think from the perspective of, I would want people to be in a situation financially where they have money left over and are not, living from paycheck to paycheck. Now, I'm not saying everybody. Obviously, there are people that make 80K and are able to save and do things more effectively and stuff like that. But for the most part, most people, even earning low six figures, are living paycheck to paycheck. So I don't mean to offend anyone. If that's their target in life, that's fantastic, and I hope you achieve it. But it's not something I consider very significant financially speaking. I think the point where people, in my opinion, are earning good money is when they don't have to worry about money anymore. That's when I consider good money. You know what I mean? When you're not worried about money. When money is not a decision-making factor in your life, that's when I consider that you are earning a good amount of money. But that's very few of the brokers, and it's usually brokers who have good connections. That was what I was saying. So like one of the guys that, dude, it took him like, no joke, 4 times to pass the test for Series 6, Series 7, which, just so you guys understand, that is one of the easiest tests to pass. Like the fact that it took him that long was like insulting. This guy was a moron, but he was a trust fund baby. His father was worth like 80 million. And so his father told all his pals, like, hey, come on, just put a few million in with my boy. And so this kid started out with AUM, I want to say, of roughly about 100 million. So he made a ton in commission. He was a moron. And I say that with every ounce of my being. He was a complete moron, but he had connections. So he made good money. Well, zone entries are going to be if it's been hit already once, keen in, but not penetrated more than 50%. Well, you know why, Pancho? Because they knew his father. His father was a client of the brokerage. So they knew where he was coming from, and they also knew his father had 80 million with us, and his father, they didn't want to lose the father, right? Those were fat commissions. They didn't want to lose the father, so they're like, yeah, we'll give your dumbass son every opportunity possible to become a broker. And that's what they did. And realistically, was it to their benefit? It was immensely to their benefit. He brought another 100 million from his friends. You know, but the kid was a dumbass. Oh my God. Talking to him was the worst. At one point, they asked me if I would help him study for it. I'm like, not even a remote chance. I have no interest in sitting with this moron more than I have. He was also kind of a douche, you know? So, like, not only was he absolutely idiotic, he was also really unpleasant to be around, you know? So it's just like, there's zero chance I will help him at all. You guys, good luck with your trust fund, baby. I'm not going to be a part of your project. Anyway, we do have structure right here, Hannah. This is a little level, right? And this might be an opportunity because if you look at it up close, it's a breakaway gap. You see this breakaway? My concern with it are, of course, we're gaining our momentum off the higher time frame weekly, monthly right here, right? We're gaining our momentum from here. So I'm a little concerned about that because the real impulse is coming from down here, not from up here. But this could be a potential confirmation trade. So if you see a candle close reverse out of the zone, like it has to enter the zone, right? We have to enter the zone, and we see a candle close reverse out of the zone, bullish. That could be a potential trade opportunity depending on the risk to reward ratio. This isn't helping us because that's very broad and very choppy right there. So it's not giving us great structured target. I don't think it gives us enough room. I don't think it matters. I think it's too tight structure for us. Right there. Oh, no, sorry, that's not the most recent one. I have to go over here. Sorry. I just didn't realize that was a gap. Let me move over to the side. Oh, we're already past that. That's gone. That's done. Never mind. Never mind, we're done. Sorry, I wasn't all the way to the right. I didn't even realize where I was. There's just nothing here. There's nothing here. This is down to where we were over the chop over here. Yeah, there's nothing I would trade over here. So I wouldn't take any trades on this. I would imagine, Venny. Yeah, we've thought about doing that, you know. Thanks, Dan. We've pondered doing that. I honestly, it's just the paperwork. I haven't done it yet. If I was going to do it, though, I would only do it as what's called a separate managed account, which essentially means you would still have control of your capital and you would be able to open or close your positions anytime, but it would mirror our trades. Maybe down the line, man. Even if I'm going to do it, though, I would only do it for Phantom members, too, because I want people to understand it. It's not something anytime soon. Like, we're talking maybe a couple years from now. Maybe we'll do something like that. I've pondered opening a hedge fund, too. But for those of you who don't know, if you want to invest in a hedge fund, you have to have 2 million. You have to be what's called an accredited investor. So you have to have at least 2 million liquid that you can invest. So it just makes it very cost prohibitive for most people. How would you trade if the market is closed? You don't trade if the market's closed, Jake, but you can do analysis, right? You can prepare. All right, what's next? What do you guys want to check out next? Let's look at another chart. Don't forget, guys, if you want to learn more about this, workshop Thursday night, 7 p.m. Eastern. You can register on our website, TradePhantoms.com. And in that workshop, we will do a deeper dive in all this stuff, guys. We'll teach you a lot more about how professionals trade and analyze the market. I'm going to be teaching it myself this week. So if you want to hang out with me for about an hour and a half, we'll be covering all these topics in the workshop. How the markets really work, how professionals trade and analyze, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with the financial institutions, how to trade in all directions, whether the market is bullish, bearish, or consolidating, how to use leverage properly. Leverage is very important. It allows you to reduce your risk, reduce your capital exposure, and generate higher rates of return. The difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading at a professional level. And if you are interested in becoming a Trade Phantoms Pro member, if you want us to actually teach and mentor you and trade live with you, we even provide you with trades that we ourselves take in the market, you will have a special opportunity to enroll at a discounted rate because we have that promotion going on for new members. All right? So if you're interested, come hang out with us. If you want to check out reviews of actual existing members. Speaking of which, existing members, give us more reviews. We need more reviews, guys. We only have 48 reviews. We have over 600 members. So if you guys don't mind, give us a review over on Trustpilot. But we have a 4.7 star rating, which is really 4.9, but only if you pay Trustpilot, which I'm unwilling to do. But if you actually do the math, it's actually 4.9. Either way, it doesn't matter. 4.7 is still good. So if you like reviews, go check them out. Thank you, Steven. I appreciate it, my man. It's okay for an extra check mark, man. Nothing wrong with looking at volume. I just wouldn't make my trading decisions off volume because, of course, you can hide volume through dark pools, right? So you just want to be aware of that. All right, sorry. What was the one you guys had said? SPY and then STT, and then you said a bunch more. Let's do SPY first because I think I had that first, right? And then we'll do your STT user. For those of you who asked me for SPY, were you asking for a day trade or a swing trade on SPY? We can check out Broadcom, sure. I don't think I have enough structure to do a swing yet anyway, but let's check. Starting to get some structure, starting to, but is that enough for me yet? Not yet. All right. So I don't have any good monthly supply here. I don't have any good levels of institutional selling right here on the monthlies yet. This candle is still active. Maybe this will form a supply zone. Maybe not, right? Can't predict the future. Let's drill down to the weeklies. And here we start having more structure. Is it good yet? It's iffy, right? You have kind of a drop, base drop because of this big gap down. So a little continuation pattern right there. Area of institutional selling, driving price action down. Some big banker institutions sold heavily here, driving price action down. But more importantly, when they sold here, did they fill all their sell orders, guys? I'll always start with the monthlies first if I can, Warrior, because higher time frames are just very important, right, for structure. But it doesn't have to necessarily be. Yeah, they couldn't have filled all their orders, right, guys? Because if they'd filled all of their orders, we wouldn't have had this massive impulse down. Just so you guys understand, this gap is like a continuation impulse, right? It's like I have a red candle right here. Here, let me take off the extension. That is like I have a red candle like that, right? Opacity, full red. Does that make sense, everybody? It's like I have a drop, base, drop. Is everybody with me on that? Good, good, good. Gaps matter. Don't ignore gaps. They are very, very important to structure. Gaps, regardless of the size of them, are always impulsive moves. So very important to be aware of gaps, right? So drop, base, drop. So some big banker institutions sold heavily here, driving price action down. Why were they selling up here? Just keep watching, Cha-Cha. I'm having a great day, Aaron. Loving the new place, having fun. Yeah, they're taking profit, guys. What's the point of trading for financial institutions? Why do they trade? To make money. That's why they trade. To make money. It's all about money. Make money. Right? They're not in it for like, man, I really believe in Apple and I think they're such a great... No, it's money. Make money. Yeah, that's all it is. So if you there's one important thing to understand about the financial markets, it's this. Professional traders, before we get into trades, guys, we already have our entry calculated. We have our stop loss calculated, right? Our risk. We already calculate our risk. We're going to limit our risk on a trade. And we have our profit target or targets if there's more than one calculated. We know our entry, our stop, and our profit targets before we get into the trade. That is how we determine where to get into a trade and whether trade is worth taking. Does that make sense? If a trade does not meet your risk to reward ratio parameters and your position size parameters, trade is worth taking. Does that make sense? If a trade does not meet your risk to reward ratio parameters and your position size parameters, doesn't matter what time of day I do a live, guys. Green always has a sense. Anytime I do a live, he's like, this is the time to call Mr. Black. Every time, I swear. It's a gift, man. Anyway, back online. Are we live again? I swear, I could do one at like 3 in the afternoon and he'd be like, time to call. What's up, Keith? Yeah, man. I'm here in the new house. Loving it. I'm not coming to his fight. I'm not flying back up for that. Oh, cool, Chan. Well, come to the workshop, man. It'll teach you more about how professionals trade. You'll definitely learn a lot more about how the markets really work. I'll tell you this, guys. Regardless of whether you become a phantom or not and actually have us teach you, going through the workshop and understanding how the markets work is extremely valuable to anybody if you're trading. So I strongly recommend, even if you're not interested in becoming a member, if you're like, I don't care, I'm going to struggle and figure it out on my own, that's fine. Come to the workshop. It will help you in terms of your trading. No, Blue's over in North Carolina, I think, Aaron, if I'm not mistaken. Oh, it's great, man. Beautiful out here. Little hot. just a smidge hot here in Austin. Slightly hotter than Boston. Just a titch hotter. So anyway, impulse, bounce, impulse. They placed this large sell order. They were taking profit, right? But did they fill all their sell orders? Well, no. The same way when banks buy heavily, it creates imbalances where there are more buyers and sellers, and that drives price action upwards. If they sell heavily when they start taking profit, that's going to create imbalance of more sellers and buyers, and that's going to drive price action downwards. Everybody with me on that? So the same way institutional buying will cause price action to move up, that's the same way when they sell and take profit, that'll cause price action to move down. Good. Large orders create imbalances in order flow, driving price action. And more importantly, leaving behind those unfilled orders. So looking at it from that perspective, here I have impulse, balance, impulse, area of institutional selling. And here I have impulse, balance, impulse, area of institutional buying. Who was asking me about support and resistance before? Who asked me about that? Somebody had asked me about it in the chat. You still here, whoever asked me about support and resistance? ICT asked. Did you guys see that video? For those of you who are Phantom members, did you see the video that was shared in the chat on the TJR guy making fun of the ICT guy? I think it's funny when they make fun of each other. Because I don't think either of them knows how to trade. But it was funny. It was a funny video. Yes, I am a human being, TikTok. Thank you for verifying. I love having you fill the puzzle in to prove that I'm an actual human. Oh, dude. You know, I kind of like them, San, because I love that he just reinvents stuff that already exists and pretends they're his own. Like, it's one of the most amusing things to me, where he'd be like, yeah, I sell these round rollies. And it's like, aren't those wheels, man? Aren't those just wheels? And you're like, no, they're completely different. These are my thing. These are round rollies. They have nothing to do with these, what did you call them? Wheels? I've never even heard of wheels. These are round rollies. They're a complete ICT invention. It's like, I'm pretty sure those are just wheels, man. I was living in Ashland, Bob. I find it funny. It's funny, you know. You'll notice I just call them order flow. Like I'm not calling them, here's my Phantom Go box, guys. But it is amusing. Anyway, where did price turn? Where did price turn, guys? Came back into institutional demand. Hit those unfilled orders, all those UFOs, more buyers than sellers. What happens to price? Boop. Should that be surprising to anyone? Should anybody have been shocked with this reversal? Phantom Go boxes are kind of catchy. You know, I think this thing of like me switching between the different accounts helps San. I really think it does. Like, I kind of took a break from the main account, and then now I think it's like, oh man, he hasn't been doing lives every day. Maybe we should, allow him to go to his followers. Because you got to think, dude. I mean, we have 40,000. I know we're not the biggest account, but 40,000 followers, it's reasonable that we should get more than like 20 people in a room when we do a live. Phantom Supply. Based off structure, Asaras, I'm looking for impulse, balance, impulse. Cool, Fraser. That's stuff we have to do, man. I know people want more merch, man. I have so many other stuff. Like, I have to finish reformatting the crypto class because that's done. There's so much stuff I have to do. It's always something like in the back of my mind because I know you guys keep asking me for merch, and I apologize for taking a long time with it. It's just I always want to get the content out more than anything else, you know? But we'll be done with that soon. Isn't that cool, Steven? I mean, that's a big gap, especially for SPY, right? But it is cool, right? It just gapped right into demand, hit that huge pile of unfilled buy orders, and boom, shot right back up. Yep, that's the next one, user. Wealth management comes after. Yeah, we can check it out, Norbert. So, oh, you guys should see my to-do list. My to-do list is insane. And like, even though we finish stuff, it just grows. Like, because every time I think about stuff, like I always think about it from this perspective. Like my goal with, just so you guys understand, my goal with Phantoms Pro is to make it undeniably the best trading education that exists. Like we're something where even like competitors of ours have to say like, yeah, they're really good. You get what I'm saying? Like that's my goal with it. That's what I'm trying to do. So I believe we already are, but that doesn't mean I'm done. There's a lot of stuff that I want to improve and things of that nature. And so like there's just a huge to-do list of stuff. You love a mug? You know, Joe designed a mug. It was really nice. He sent me the artwork on it. He designed a mug that looked he did like a bunch of hearts and it was like zones on top of zones. It was cool. The artwork was cool. Anyway, all right. So institutional buying came back in, institutional selling. Let's drill down to the dailies, and this is where we're going to see this is going to act as our intermediate time frame here on SPY, guys. So what do I want to evaluate on my ITF, guys? What am I evaluating on my ITF? Thank you, guys. What am I doing on my ITF? Yep, I'm going to do structure, but what's the first thing I'm going to evaluate? Going to evaluate my trend, right? What is my trend? Because we want to be aware of what the trend is on the ITF. So what's our trend here? Interesting structure, right? It is still a downtrend. It is still a downtrend, right? Because if you look at it, impulse correction, impulse correction, impulse correction, impulse correction. So still a downtrend. We have bounced off of this demand zone, but we have not broken our control point. Where's our control on our downtrend? If you guys don't understand why this is still a downtrend, allow me to explain trend to you. What is the definition of a trend in the financial markets? Because trends are not actually up for grabs, guys. I know sometimes people have their interpretations of trend, but trend is actually a definition. Trends are defined by establishing higher highs and higher lows for uptrends, or lower highs and lower lows for downtrends. That is the definition of a trend. And to establish a trend, you have to establish at least 3 clear segments directionally and have broken the previous trend if it existed, right? So we had a very clear downtrend. Lower highs, lower lows. Lower high, this correction counts, right? Lower lows. Lower highs, lower lows. Lower highs, lower lows. And so far, just a lower high. Can everyone see that? Does everyone see what I'm talking about? If you have a hard time seeing it, sometimes dropping to a line view makes it a little bit easier for people to visualize. Lower highs, lower lows. Lower highs, lower lows. Lower highs, lower lows. Lower highs. Is everybody with me on that? Does that make sense? Because we didn't have structure on the monthlies, Randy. Give me a yes or like in the chat if you understand why this is still a downtrend. Despite our dramatic pullback from this demand zone, this is still a downtrend. So what does that mean for us as retail traders? Now, just the only thing you have to be careful with line views, even though it makes it easier to see peaks and valleys, guys, is it doesn't show gaps. So you have to be careful with that. You have to double check on the candles just to make sure the structure matches, right? But it is nice to be able to see it that way, right? Ah, great question, Smarta. They do not. Why don't they count is perhaps the better question. Why don't wicks matter when it comes to trend? It's the same reason wicks don't matter when it comes to zones. But why is that? They do, right, user? Wealthiest companies in the world. To think about that, between those 3 companies, they control, what? Over $20 trillion? Those 3 companies control over $20 trillion. Isn't that crazy? Yeah, because you want to avoid sweeps. Exactly right. Because banks will purposely push price through levels, and that will create false breakouts. And you can have these big long wicks that might seem like a break of structure, but aren't actually a break of structure. That's why you want to be careful with wicks. That's why we care about candle closes, not just wicks. Cool. Yeah, it's insane when you start thinking about. That's why I always think, like, somebody asked me the other day, aren't you worried that if you teach people that then if everybody's trading that same way, that then that will be something that it's going to give you less opportunity? I'm like, guys, do you understand how small we are? Like, do you understand how small we are in comparison to these companies? Like, it's not like, oh, really? Dude, it's like, it's a drop of water in comparison to the ocean. Even if we all trade together, we're a drop. We're a drop in the ocean. We're so, maybe, but what if you become 2 drops? So what? Dude, it's nowhere close. It's not even remotely close. I always find that funny when people say that to me. Because people will say that sometimes. I'm kind of enjoying, I've been making looser comments over on Threads, because there are a lot of like fake gurus over there, and I've been amusing myself making little comments here and there, little jabs left and right on Threads. It's been amusing me for the last few weeks. What's up, Sean? How you doing, brother? There's plenty of room, right, user? What about opens? If you had no closed breaks, but if you gap out of a zone and immediately come back in, yes. Not only that, it can provide us with great opportunities, Joseph. Absolutely. Like, for example, what if you have a breakaway, right? There you go. We can check out after Banana. We have some others ahead of you, though. Kind of. I mean, not really. First of all, just to be clear, Chicken, I don't make trading decisions off flags anyway. If you guys don't know what a flag is, I believe I did a video on it here. I think I did a video on it. Didn't I do a video on flags, guys, at some point? Look at Green's big head all over the place. We should post some more of these older ones. Bear flag, there you go. So that's the formation of a bear flag. This is how I feel about all this stuff, guys. It's fine, but it's just confirmation. That's all it is. Never make decisions off flags. Like, I share this stuff with you because it's useful to know, right? Nothing wrong to know about it. That's right. What? Oh. No, Banana. I'm not going to create a whole TikTok just for one analysis for you. No, come into another live, dude. You can hop into a live tomorrow, man. But no, I'm not putting together a TikTok just for you. You know what I'm going to do the rest of the day after I'm done with this live? Nothing. But I appreciate the question, man, I guess. That's the wrong spelling, Norbert. You wrote TradePhantoms. That's not TradePhantoms. So you might have done one of those scam accounts. Just be careful. You might be tagging a scam account. Just so you're aware. By the way, guys, I've made it super simple. I've made it... It shouldn't even say 6. Why does it say 6? I didn't follow 6 people. What? See how it's only 2? Why is it showing 6? I made it simple where all the real accounts only follow each other. Just so you guys know. So every single real account of ours, it only follows 2 other accounts. Yeah, isn't that weird, dude? Why does it show 6 there? That's so strange. I don't know. Who are these people? What the hell is this? Dude, what is this? What is friends? What's the difference between friends and following? I don't know who these people are. No offense if you're members of Phantoms. I just don't know who you are. I don't know who either of these 2 people are. That's so weird, man. Whatever. I'll have to figure it out afterwards. Dude, who knows, man? It's just annoying. Yeah, but I don't follow random accounts, guys. That's why it's weird. Like, I just don't. Even when I was following other things, it wasn't other members. Like, I will never follow you back, guys. And that's not to be mean. It's just, it's not of interest to me. So if you follow me and then you get a follow back from something that says TradePhantoms, no, you didn't. We did not follow you back. That's not us. That's one of the fake scam accounts, and then they're going to message you and try and get you to open up some crypto wallet bullshit or something like that, or tell you about their special club with Mr. Black where he trades for you. I don't do any of that stuff, guys. So it's never me. I'm never going to make earnings representations. And if you get, and I also never message you. I will never randomly message you on TikTok. I don't go through 40,000 people and just say like, hey man, want to learn to trade? Like, I don't do that. That's not a thing. That's not a thing I do. So just be aware of that. Those are the scam companies, right? Anyway, so that's the control point. For us to break our downtrend, we would have to break all the way above here. Right? So still a downtrend. Oh, I'm sorry, Joan. I don't know, user. Medium, maybe? Sometimes. It depends on my mood. I would say for the most part, I don't. But I can get into moods where I do. It's a funny thing if you guys have ever been on an actual trading floor. It's somewhat like a frat house, if that makes sense. It's very bro-y, right? And it's not necessary. Well, hold on, just to be clear, 20-something years ago, things may have changed. I don't think they have, at least based on my friends that still work at hedge funds and stuff. But either way, not politically correct at all. So don't think that will be the case. Like, they are not very sensitive to people's feelings. Almost the contrary. Very aggressive environments. Lots of cursing. Very frat housey, So that's the environment of a trading floor. So if you get me amongst my brethren from back in those days, I can be a little bit more, But for the most part, I'm pretty cautious about that sort of stuff. Especially public facing, Yeah, no, if you message me, guys, I will respond to you. I respond to any messages we get, but I just won't randomly contact you out of the blue. That's just not something I do. And it's not to be mean, it's just, why would I? I don't believe in the concept of convincing people to do it, guys. Because it's a lot of work to learn to trade. People have to want to trade. Who did we have? We had somebody in the workshop this week where they were like, very interesting. Convince me to do this. And I wasn't doing the workshop, it was Green. But Green put it very bluntly. He's like, I'd rather not. I don't believe in convincing anybody. And that's the way we think about it. Like, if people aren't willing to do it, why would you want to convince them? They're going to be the worst member possible. They're going to be the most annoying member. I had a guy the other day, this morning, who was like, well, blah, blah, blah. So you guys give a money back guarantee based off your trades. So, I mean, if I don't make money in my first month, then how does that work? And I'm like, it's not your trades, dude. I can't make you into a magical trader overnight. Like, that's ridiculous. And he's like, well, but I'm pondering joining. I'm like, dude, I'd rather you don't join. I can just tell by your mindset that you're going to be a horrible fit for us. Because you're going to be the type of person who's like, I want to be instantly a multi-millionaire. It's like, that's not going to happen, dude. He didn't like that. He was a little rude. When I said I'd rather you... Maybe I was rude when I said I'd rather you don't join. But I thought I was being very reasonable and realistic. But he for some reason didn't take it that way. He seemed to have taken it from a more offensive standpoint. Oh well, stuff happens. Anyway, why do you need a bachelor's to work at a hedge fund? I don't know, man. That's just the way they do it. I don't know if they still do it that way, but that's what they needed back in the day. I don't know if they still do either, users. Maybe they don't need it anymore, You know what's crazy, Cha-Cha? Women at the beginning tend to fare better with trading than men do. Which is absolutely hilarious because it drives men insane a lot of times. Because women are better at following direction than men are. For the most part. And I know that's a generic statement. But most of the time, women's egos get in their way less than it does with men. Does that make sense? Like, most men are a little bit more ego-driven than the average woman. So when you teach people to do something, if you say do A then B then C then D, women will usually be like, got it, A then B then C then D. And men will sometimes be like, got it, do A, B, and C. But sometimes you'll get men, they'll be like, well, do I have to do C every time? Like, what about when it's like this? Because, I mean, like, I once heard about maybe doing, Q instead. Why don't I do Q instead here? And you're like, oh. How did Q work out for you, man? Well, I didn't make any money doing Q in the past. It's like, yeah, that's why we don't do Q. But it's just, so in general, women tend to fare better at the beginning. In the long run, they end up being about the same. Not in my experience, Smarta. Now, this is an interesting thing, by the way. Women, and again, I'm speaking in generalities, of course. This isn't the case for everyone. Women tend to give up more quickly than men do, which is an unfortunate thing. I've seen women give up way faster than men do. And I don't know why that is, but I can say statistically, it's a significant thing. There is a higher quit rate from women than there is from men. Could be stubbornness, sure. I think it's more risk aversion. That's what I think too, Warrior. So, it's very interesting to see. But, I mean, we have some badass women members that are crushing it with their trading. What's cool is we also have some families that are traders, guys. I don't know if you guys know this. We have multiple Phantom members that they have, like, their family, like husband and wife, both members. I have husband, wife, and daughter. I have husband, wife, and son. I have one guy with his two sons. Like, it's kind of cool because, like, once people start seeing consistency with it, they're like, hey, I want you doing this too, The same way, like, I want my daughter to learn to trade because I think it's just, why wouldn't she? It's a valuable skill set. Yeah, Cam, I worked at an investment firm as a trader. That's my background. You can do it, Cha-Cha. It's 100% within your control. Just keep sticking with it, work it, and you'll get better at it. Yeah, it's cool, right? It's pretty cool. I have one member, guys, to give you an idea, I have one member who's so happy with us because he'd been trading for like 5 years and he'd been struggling with his futures trading. And I won't tell you who it is because he can tell himself if he wants to. Because of what he's seen in his last 8 months with us, he's brought us like 10 people. Because he had been in all these groups and he'd been like, dude, I've been struggling for years. And this is the first year where I'm going to have to report like my, earnings to the IRS. I'm like, that's awesome, man. So it's cool to see people get consistency in the markets. That's why we do it, guys. It's fun. It's a fun community. It's fun to do it. It's fun to teach people if they're willing to learn, right? It's annoying to teach people who are lazy. Those are the annoying people. I don't understand how to do this. Did you go through the lesson? Well, no, I haven't watched the lesson yet. Can you just explain it to me? No. Go watch the lesson first. And then if you don't understand it, I'll help you. But you do have to actually do some work first. Some of us do live trading when blue is off. I heard some wife in the background. That's pretty funny. Do you have a promo code? Flacco. It's not up on the website now, but if you send me a direct message, I can turn it on for you because we do have a class for new members starting on Monday. So just send me a message and I'll turn on the promo code for you and send it to you because it does lower it pretty significantly. The monthlies, it goes from $249 to $139 with the current promo. The quarterly goes from $649 to $299 for the quarter, so less than $100 a month. And the annual, if you want to knock out the year, it's $9.99 for the year instead of the $21.99. And what's cool is you get grandfathered in at that price, so you have that membership price for as long as you're an active member. You can also still cancel at any time, guys, just to be clear. So, like, even if you do the quarterly or the annual because of the bigger discounts, if you decide to cancel early, we will actually prorate and return the difference to you. Like, we're not going to keep your money if you don't want to be with us. Cool? So just send me a message and I'll send it to you. Awesome. Yeah. Been a while, missed your live. What's up, T? Good to see you, man. Learn it for me. Those are my favorite, Joseph. You can start teaching your kids. 100%. That's one of the coolest things, Joseph. Legacy, right? Sounds good, Cam Bam. Come to the workshop. Like for sure, then we spend days studying to be the best. Yeah, exactly, man. It's all about perseverance, dedication, commitment, right? Thank you, Smart. I appreciate it. Can you DM him? Yeah, Chacha, just send me a message and I'll send you the promo code. If you guys want to do it, Monday's class is going to be at either 6 or 7 p.m. Eastern. I don't remember because I didn't set the schedule this week. But there's just a few things we want you to complete in preparation for it. But I'll send you the promo code and then you can just register. It'll set up your account and then I'll have you do some stuff in preparation for class on Monday. Am I going for puts on Monday? Puts on what? I don't know, dude. I didn't even watch Blues, man. Guys, you got to think, like, I've been moving the last couple days, so I haven't been watching the market as much. Like, you know when's the first time I checked my account yesterday? 6 p.m. That was the first time I checked my account yesterday of my trades, which is crazy for me. Just to be clear, like, that's insane for me. I normally, the first thing I do in the morning is check my account. So you can imagine how surprising a day it was when I was like, holy crap, I haven't even looked at my account today. Yeah, I mostly swing trade, so it wasn't a big concern for me, but you know. Yeah, I heard he crushed it, dude. I don't know, I wasn't in it. Who was in the lives with Blue this week? I know I heard you guys had a good week, but I didn't see the trades. I know Green's off to a monster start with Forex, guys. Your Forex month started off really nicely. Oh, Cam Bam. I mean, that's one of the hardest parts, brother, right? If you want a good book on the psychology of trading, I would recommend checking out Trading in the Zone. That's a great book on the psychology of trading. It is one of the most important parts. I would also recommend starting with smaller amounts of capital, right? I think smaller amounts of capital lend to people being less emotionally invested. So, like, to give you an idea, when I first started trading Forex, I would risk $1 to make $3. Now, this wasn't a lack of capital. You know, I was an analyst at a major investment firm. Like, I made good money. But I wanted to focus on the process and getting consistent with my trading before I put more capital into it. Does that make sense? So, like, trading $1 for $3, it was something where it took a lot of the emotion out of my trades because the money didn't matter to me. If I lost $1, I didn't care. If I won $3, I also didn't care. Neither one affected me significantly in terms of financials. So it really allowed me to take as much as I could. Now, could I, in my mind, extrapolate and be like, man, if I can do this, then that could be the same as 1,000 for this? Yeah, I understand in the background. There's always going to be that thing. But it took a lot of the emotion out of the trade itself, right? The trade was kind of like humdrum. And like, even when I went, I'm like, whoop-de-doo, $3. Like, it wasn't something I was like, yeah, $3, you know. So it just helped me, and I find most people fare better if they trade with smaller amounts of capital, establish consistency first, and then once they're consistent, then they can start scaling in, you know, because then it's no longer an emotional thing. Then they've established enough of a history where they're less likely to make the emotional decision. You still have to contend with it. It's never going to go away, but discipline's such a critical aspect of trading. It's often what separates good traders from bad traders, just being disciplined in their trading, not over leveraging, not over positioning. You should never be all in on one trade. You should never be doubling your account off of your trade. You should never be blowing up an account off a trade. Neither of those is correct, right? Sometimes people will try and impress me with numbers. They'll be like, I grew my account from 10,000 to 40,000 over the last 3 months, and now I just want to learn more advanced stuff. And I'll be like, dude, I understand that you're saying this to try and impress me. That's not good. That's bad. And people don't think it's bad. They think it's amazing. They're like, what are you talking about? I crushed it. It's like, no, you got lucky. And luck is not something that you can do consistently, right? Luck's not a strategy. Like, let me just be really lucky for the next several years. It would be nice if that was a strategy, but that doesn't work. You know? So it's something where I always tell people, like, I'm glad you made money. Please be proper with your risk management, because otherwise you're going to give that money right back. And that's what ends up happening to most people, right? Even when they make a bunch of money, what do most of them do? Give it right back a couple months later, right? Paper trading's okay, man. I'd rather you live trade with small amounts of money than paper trade, because paper trading doesn't have any emotion, but also paper trading is on delayed data. So you're seeing delayed data, right? It is different to trade live with real money than it is to trade with fake money. With fake money, people are willing to do things that they would never do in real life. You know? So like, I've seen people paper trade where they'll put, I don't know if you guys have noticed this, almost every paper trading account gives you a significant amount of fake money. Has anybody ever noticed that? They never give you like $5,000 of paper trading money. What do they give you? 100 grand, $1 million, right? Why do they give you so much money, guys? Why do they give you so much fake money? What's the reason for that? Why would the brokers want you trading with a bunch of fake money? Absolutely, Aaron, 100%. What would be their intentions with that? Why would they want you doing that? Well, because if you're trading with a large amount of capital and you don't understand risk management, what a lot of people will do is they will take this large amount of fake capital, they will be all in on these trades, and then they'll take trades where they'll make like, man, I just made $4,000 today. I just made $4,000 just like that. Man, that was amazing. And it's like, yeah, you risked $100,000 to make $4,000. Would you ever risk $100,000 to make $4,000 in real life? No, you would never do that in real life, right? But in fake money world and monopoly money world, you'd be like, yeah, amazing. Man, that was easy. I just saw the green candle going up and I just bought a little bit and then I sold there $4,000 just like that. And it's like, yeah, that was easy. And so people will start learning poor ways of trading. They'll start learning to chase price action. But it's not, right? It's not $4,000 because it's not a trade you would ever take in real life. You would never risk 100,000 to make 4,000. And that's the problem with it. So it creates this false positive, and then people start putting real money into the account, and then what happens? Doesn't work out the same, does it? Who's paper traded and then seen and been good with your paper trading, and then the moment you went live with real money, it wasn't the same? Who's ever had that sensation? Not quite the same, right? Different trading with real money than fake money. Also, you do have an inherent bias because you're trading on delayed data. And there have been multiple studies on this, guys, so this is not my opinion, where even though people don't necessarily consciously recognize it, even if it's subconscious, even if it's just as simple as you walking past a TV set that says futures down today, right? And maybe you don't even consciously recognize it. Maybe just register it subconsciously. And then you sit down in front of your paper trading account, and paper trading accounts are typically, for those of you who don't know, typically delayed 15 minutes. So you're trading on delayed data, and you're looking at the market, and you're like, man, I don't know why. This market just looks really bearish to me today. It really looks like it's going to be bearish today. And then all of a sudden, you're prescient. You're seeing to the future, right? You're like, man, my instincts, I don't know what it is. My instincts are amazing. It's like, yeah, what an ability. You know the outcome before you took the trade. What a gift. So, just things to take into consideration, guys, in paper trading. I think paper trading is useful for understanding the mechanics of how to use a platform and stuff like that, what buttons to press, stuff like that. But for actual trading, I think it's kind of useless. There's a reset button, yeah. Yeah, exactly. So it's that's all. That's my opinion on it. Anyway, institutional buying, institutional selling. Can everyone see how we were to hit this demand zone? Right? Impulse out, came back in, hit the Enfield orders, popped out, came back in again. So this thing's already been hit twice, if you really look at it. Right? Because we gapped out here, came back in. That was the first retracement. Oops, see? That was the second retracement. 1-2 hits to it. Realistically, let's just mark the first one. And then here, we just hit the supply zone, but this is a red continuation pattern on a daily. So what does that mean? What do I have to do on a red continuation on a daily, guys? Oh, it was fun, man. We stopped at different cities. I've never driven across the U.S., so it was an interesting experience to kind of stop in all these different places. Like, when in my life would I have ever had the situation where I would drive through Tennessee or something, I've never had that situation. So it was fun. I enjoyed it. I don't know if I'd do it again, but I enjoyed it. At least as an experience, it was fun. I got to go to, what's it called? Buc-ee's. You guys ever been to Buc-ee's? I've never been to a Buc-ee's. I'd seen there are things on like social media and stuff, but I'd never been there. Fundamentally driven. That's why I make careful decisions on fundamentals. Now, this zone's obviously been broken since here, but can everyone see how the first time we came back into this continuation pattern, impulse, balance, impulse, area of institutional selling, price came back in for the first time, and what happened? The first time, we bounced back out because we hit those unfilled sellers. Does everyone see that? Does everyone see what I'm talking about there? I'm going to take away this big circle if that's all right, guys, because we don't need it anymore. Does everyone see how the first time we came back in, we hit those unfilled orders and we got pushed right back down? Where do we get pushed down to, guys? To demand. Then we hit these unfilled buy orders. And look at that 4-hour daily correlation, guys. Zones on top of zones. Where did price turn, guys? I'm not going to be able to erase that circle now because I just drew this on top of it. I'm going to move this down because that's going to annoy me. Is it still not going to let me? Oh no. Well, whatever. I'm not willing to do all that. That's too much. Where did price turn? Can everyone see where it turned? Right where the two zones overlap each other. Does everyone understand the importance of multiple time frame correlation? Bloop, pop right back up. Where did it pop up to? Supply. So now we're into the supply zone, but we've already hit the supply zone once, popped out, had a little mini reaction here, and now we're deeply penetrating into it. Am I interested in trading the supply zone anymore, guys, at this point? Oh, dude, I tried all their jerky. It was actually good. Like I enjoyed it. I enjoyed their jerky. It was good. I particularly liked the honey jalapeno. It was tasty. No, I'm done with the supply zone. I wouldn't trade anymore. Let's forget about the fact that this one's broken already, right? It's already candle closed through. Let's say it reverses out of this higher time frame supply. Would I be willing to take this higher time frame supply? Standalone daily, right? And if you look here, I don't think we have enough meat on the bone if I trade down to here, but I could be wrong. It might just be just enough. Nope, not enough meat on the bone if I trade. So even if I ignore this little mini continuation pattern right here, because that's a demand zone, guys. We can't ignore it, right? That's institutional buying right there. What are they trying to do there, by the way, guys? Why are they trying to buy right there? Why are they trying to buy right there? What are they trying to do? What's happening right here in terms of the markets? What are you seeing happen in the markets right there? Yep, somebody's trying to push price up. And somebody who has money, right? Because this isn't us. We're not doing this. We're not creating that imbalance in SPY. They are trying to break through that supply zone. So somebody with money, probably this same person over here, sees vulnerability in the supply zone after being hit once and thinks they can push price through. Will they? Well, that I can't tell you. That depends on how many unfilled orders are left on the daily zone. And we can even see that we're having a little bit of pushback, but it's going to depend really on how many buy orders there are here versus how many sell orders are left here. You are seeing two banks fighting each other. Can everyone see that? Banks don't like fighting each other for the most part, but it's not to say that they won't. If they see vulnerability or they see an opportunity to make money off another bank, oh, they have no problem making money off another bank, right? They just want to make sure. So this is what I can tell you. I can almost guarantee you that whoever's buying here, here, and here knows who this is, because banks won't typically take oppositional structure to another institution unless they know who it is, right? Because they don't want to leave themselves vulnerable. Because who's the only person that can really hurt a bank? Another bank. Right? The only people that have enough capital to really financially hurt another bank or financial institution are other banks and financial institutions. So for the most part, banks don't like trading against each other. But if they see vulnerability, if they see an opportunity to take money from another bank, they'll take it. Right? Wall Street bets. So next level up. So I wouldn't trade the supply zone. Not enough, even if we ignore this demand zone right here, there's not enough risk to reward ratio, and that's a very important part of trading, right, guys? Trading is not just about finding high probability trades. Yes, you need to find high probability trades, but you need to take it that extra step and look for trades that are high probability, but that also have low risk with high profit targets. And ideally, we want to look for profit targets of 3 to 1s or higher. This is a 2.8. If we ignore this demand zone, it's a 2.8. And you should never ignore that demand zone, even though it's a lower time frame, right? So this is not a supply zone I would trade off. We've already hit it once. It worked out fine the first time. If you took that first trade, fair enough. If you took this first supply zone right here and you traded it from here down to here, that was a 3.6 to 1. That wasn't too bad at all, right? Now, it's already been hit here. Now you're penetrating deeper. You're having institutional buying, trying to break through structure, and now you're playing with fire if you try and take this short. You can do it. You do whatever you want to do, but I wouldn't trade it. Hard to say, Randy. Hard to say, my man. That's something we don't know, right? We just don't know. I don't know. What if this guy's selling 8 million shares here and this guy's buying 10 million? I don't know. That's the problem. We don't know. We don't have that information, you know? So I would be cautious about it. I wouldn't trade this level anymore. I'm done with that supply zone. As far as I'm concerned, that supply zone is dead. This one's definitely dead. But I'm saying even the higher time frame one, the daily here, I wouldn't trade it anymore. Now up here, we have new structure. We have this other structure. And this one has not been hit, right? Impulse, balance, impulse. Nice imbalance out. But it is fundamentally driven, so we'd want to wait for a confirmation out of it before we would take the trade short. It's tight enough structure that we could have a confirmation trade and still have a viable trade, as long as we don't set up any other institutional demand along the way that affects our risk-to-reward ratio. But as it stands right now, that's our best viable opportunity for our short position, 542.29. And as far as this demand zone goes, I'm not trading this demand zone, man. That impulse out is weak. I'm not trading. I wouldn't be willing to trade that. There you go, man. That's what I just said, chicken. I don't know if you saw my answer to that. We can check NQ, man. Bitcoin, sure, we can check Bitcoin. I have to do one more before that. There was, what was it, STT you had asked me for, man? I think somebody asked me for STT earlier, right? Wasn't it user? Look at me remembering. How's that for me remembering, right? Can you believe I actually remembered that? What are the chances? Maybe it's this new Vietnamese coffee or something, man. Who knows? Something maybe it's there you go. No, not support and resistance, man. Institutional order flow, brother. IOF. Texas Air, maybe it's that, man. Who knows? I'm in Austin, Texas, man. All right, let's go check out State Street. By the way, guys, don't forget, workshop Thursday night. If you want to learn more about trading at a professional level, I'm going to be teaching a free workshop Thursday. You can register right on our website, TradePhantoms.com. Oh, you better believe it will. TradePhantoms.com. It is free. It costs you nothing but some of your time. And in that workshop, we will be doing a deeper dive. So if you want to learn more about this, just go to our website, TradePhantoms, add a .com here at the end. Click this lovely purple register here button. Be mesmerized by my beautiful, beautiful ghost logo. In case you guys haven't noticed, his legs are little candlesticks. I designed it myself. I'm very proud of it. And in that workshop, we'll be covering all this stuff, guys. We'll be getting into how the markets really work, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with the financial institutions, how to trade in all directions, whether the market is bullish, bearish, or consolidating. Important to learn how to trade in all conditions, how to use leverage properly. Leverage is your friend. It allows you to reduce the amount of capital you're trading with, reduce your risk, and generate higher rates of return. Literally, risking less money to make more profit. Who's on board with risking less money to make more profit? If you're not, you should be. The difference between all the different asset classes, stocks, options, futures, forex, crypto, what they are best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading at a professional level. And if you are interested in becoming a Trade Phantoms Pro member, if you want to join our army of traders, if you want us to teach and mentor you and trade live with you, you will have a special discounted opportunity to enroll with Trade Phantoms Pro. Cool? Is it filmed in Austin? I didn't know Kill Tony was done here, Aaron. I find Kill Tony funny sometimes. I thought Tony did a great job at, what was that roast? The Tom Brady roast. I thought he did a great job at the roast. I just watched the Rogan special. It was funny. I'm looking forward to going. I'm definitely going to go check out the Mothership, though. I love comedy, by the way, guys. That's probably what I listen to the most in terms of podcasts is comedy podcasts. Take it easy, Pancho. Well, I'll see you there. Sure, we can check out Tesla too. I like that your name is Chicken Choker parentheses Gnome. I like that you needed to have that parentheses in there, man. You're a 3 life path number of the comedian. I don't know what that means, Rugby. Oh, God, no, Smarta. The last thing I want to hear is other people talk about trading. You have no idea how boring it is to me. You know? Like, if it's what you do for a living, the last thing... It's one of the reasons why when I go for drinks with Blue, I have to stop him because Blue... Oh, I love Sebastian, man. Sebastian's great. Blue, just so you guys understand, when he's trading live with you guys in the trading rooms and he's, like, obsessed with trading, that's not a show for you guys. That is Blue 24 hours a day, 7 days a week. What's up, Save to Invest? He is obsessed with trading. It's his favorite thing to do. That is who he is 24 hours a day, 7 days a week. So it's like when you go... Now, the downside of this, it's great for you guys, right? Because you get to go and have someone who's an amazing trader and obsessed with it. But for me, it's something where if we go out for drinks, he'll be like, did you see that setup that's happening on Tesla? And I'll be like, dude, let's not talk about trading. And be like, oh, yeah, sorry. And I swear, like, not even 5 minutes later, he'll be like, but did you see what's going on right now with SPY? And I'm like, oh my God, please stop talking about trading. I don't want to talk about trading. I'd be like, oh yeah, sorry. Like, that is who he is all the time. So, yeah, it's excellent for you. It's excellent for Phantoms, you know, like you could not ask for a better member as a instructor in Phantoms because there are very few people who are as passionate about trading as Blue are. And also you got to think, guys, like most professional traders aren't willing to trade all day. Like, I'll put it this way. If you ask me, hey, Black, want to go trade for the next 8 hours straight? My answer to you would be, no, not at all. I have zero interest in that. I trade so I don't have to have a job. That's why I trade. I don't trade to be like, yeah, let me replace what would have been a job with another full-time job. That's not the way I think at all. I trade 30, 40 minutes a day and I'm done, guys. And you know what I'm not sitting around doing? I'm not sitting there later in the day going like, oh man, I missed that trade. I don't care. There's always another trade. So there's nothing like that in my world. I set up my trades and I'm done. But Blue, he will trade all day. He loves it. I only have one other friend that is as in love with trading as Blue is. Blue makes the membership negative. What do you mean, user? What each life path needs to be a comedian tell jokes. I'm just not familiar with it, Rugby. I don't know what it means. Vale, the Brazilian company? I don't know. We can check it out. Blue's win rate? Oh, no, it's very high. Oh, no, it's not that guy. No, that's a different guy. No, the friend I'm talking about that's obsessed with like Blue, he actually scalps Forex, believe it or not. And he trades like 8 hours every day. Like he has his own, he's a one-man operation. Single guy, now in his early 40s, has a nice place down in Florida, owns 2 Ferraris because, you know, when you have one, you need a backup, I guess. And all he does is scalp Forex every single day. Nice setup, beautiful setup. I always find it funny that he drives to an office. Like, he has a substantial house, guys. He doesn't need to go somewhere else to go and trade. He's single. He's single, so he doesn't have... You know, it's not like he's like, the kids are going to bother me. No, he's single. And yet, he gets into his car every day, drives to his office, trades for 8-9 hours, and then drives back home to his house. Yeah, but it's weird. It's his own place. Like, who's he getting out? Who's he getting away from himself? And his house looks like what you would think the house of a big kid would look like somebody who has a lot of money and has no responsibilities. That's exactly what his house looks like. Exactly. I do think that's what it is, Batfish. I think it's more about he has to drive the Ferrari. But it looks exactly like what you think. Like, there was a movie years ago where it was like, some like nerdy guy that became like a billionaire. I'm trying to remember what movie it was. And the life-size stormtrooper that costs like $8,000 and stuff like stuff like that. Like he has a Red Bull machine. Like, why in the world would anybody need a Red Bull machine in their home? In their home. Why would you need a Red Bull? Just put it in your fridge. He's like, I need a separate machine for my Red Bull. I'm like, okay, dude. So it's fun to hang out with him, but it is like I 100% judge his life choices every time I'm with him. I'm like, dude, you need something more substantial in your life. But he likes it. Oh, he's crazy, dude. He's crazy. So fun to hang out with him, but yeah, it's very funny. Oh, cool. Is 3 good then? Oh, some people love it, man. Some people look at his life and they're like, man, that's all I want. I have one other friend who's like married, has 8 kids, and they know each other through me. They didn't know each other before, but they know each other through me. He's like, man, his life looks awesome. I'm like, I'm sure it does with your 8 kids. Well, that's fair, Rugby. I suppose that's very true. All right. Anyway, let's keep going here with State Street. Institutional selling right there. Interesting continuation here that already retests. What sucks about this continuation is it's creating a very broad zone for us here, right? Can everyone see how we came back in and retested all the way to where those 2 zones overlap each other right here? You see how we came back into the overlap right here and then reversed out? So why is it so massive? I don't need to be that big. I hate when it does this. There we go. Ugh, stupid. Every once in a while, man, it like becomes obsessed with the magnets being massive. All right, there we go. Let's go draw our demand zones, areas of institutional buying. I mean, kind of, sort of, right? This is very clear. Look at this beautiful level right here. Impulse, balance, impulse. Nice area of institutional demand, but we have already hit it twice. 1 hit here, popped up. 2 hits here, popped up. So a little bit beat up there on that demand zone. And in terms of news structure, I mean, realistically, that's valid. That's valid, right? Both of these are valid. So lots of areas of institutional buying and selling here on State Street. Cool, man. I know nothing about numerology, Rugby. Never looked into it. But I don't mind being childlike as a definition. That sounds good to me. I think that aligns with my personality. Like, you gotta think, guys. I try and be more formal here in Phantoms. Try and represent the company from a more proper perspective. But like, casual me is a lot different than whatever corporate me. Get a few drinks in me and I'm a lot more chill. Lots of structure here, man. I'm not liking that this is right on top of supply. By the way, already reversed, right? Already came back in, hit the infield orders, popped out. So, I mean, like, look at our supply zone, right? Original structure, hit right here. Right? First hit right there. Create a little bit of zone creep, popped out, came back in, hit again where the 2 zones overlap each other, pop back out, came back in, hit where this zone was, pop back out. Demand zone, popped out, came back in, hit it, popped up, came back in, hit it, popped up. So 2 hits to this demand zone right here. This demand zone, 2 hits to that demand zone. The only zone that hasn't been hit is this one, and the impulse in is weaker on that one. Good impulse out, but weaker impulse in. So we're pretty beat up here on the monthly level for State Street. Let's drill down to the weeklies. You see how quickly you can draw a bunch of zones on a chart, guys? I normally only draw, what, 2? Look at how quickly I can draw way more. This is why I don't draw all zones for you guys, because otherwise it'll drive you guys nuts when you start seeing all zones. Don't like that. I don't like that impulse correction right there. That's not good for us. That's nice. Nice imbalance there. But because it is a retest, what do I have to do? I have to go back and make sure it's not a retest. That's new structure. So even though it's coinciding with the monthly, what happened right here? We had somebody add position here as well. So we hit the unfilled monthly orders, but we also hit and formed new structure here. So I like that we have weekly monthly correlation. I wish it wasn't a retest of the monthly, but I do like that we have the multiple time frame correlation going on right there. So starting, I would prefer, what do I mean by I don't like that it's a retest? I would prefer that when we formed the monthly, we formed a weekly and they were correlating. Now we've come back into the monthly and formed a new weekly structure as well, right? So a little bit different because we're having the structure formed when we're hitting the unfilled monthly orders and reversing out. So not as strong. What's my trend here on the weeklies for State Street? Is this an uptrend, a downtrend, or a sideways moving trend, guys? Yeah, Vietnamese coffee, let's go. I'm feeling revved. Yeah, it's still up. We haven't broken, right? We didn't break structure here. So still an uptrend, which means ideally we would like to go long. We're retracing back down to demand, so maybe we'll have an opportunity here, but I don't like that. That's not pretty. And look at that guy right there. Impulse balance, impulse continuation. And we hit that already. Ugh, that's not good for us either. A little bit beat up, dude. Just a little beat up, right? A little bit too many hits to too many of these zones. Let's see what the dailies give us. By the way, just hold on before I do this. Where did price turn, guys? Yes, as will other investment firms, user. I just want to point out, where did price turn? How cool, do you see how tight this sliver is? Does everyone see how tight this little sliver of space is? Is that precise enough for you? Does everyone understand the importance of multiple time frame correlation? That's pretty tight, right? Nice tight little zone there. Right there, right where they overlap each other. And if it lets me draw it, there we go. It makes it massive, but whatever. And boom, pops back up. Isn't that cool? What's that? Did the power go out? Yeah, that's a weekly monthly, right? So now we're starting to get some structure here. Let's drill down to the dailies. No, that's weird. Oh, you lost power. Okay, I thought you were saying I had lost power. And this is where we're going to look for an actionable trade if we have one here in State Street. I am concerned because we have a lot of hits. A lot of hits to these zones. I'm going to delete that one. We don't need it anymore. I was just showing you the monthly level. I mean, yeah, but it's a retest. And it's a retest that's already been hit before, you know. Probably. Impulse balance, impulse continuation. Does that hit already as well? I can't quite tell if that was hit. Did it hit? It hit already, so it doesn't matter. I mean, what would I normally do if it hadn't been hit, guys? What would be my normal next step? What would I normally do with a green continuation pattern on the daily? I would normally drill down. Do I have to drill down now? Do I have to? It's already happened. It already hit. So I don't need to confirm it anymore. But this is the real question. If we do drill down, will there be oppositional structure in here? What do you guys think? We already hit. We already reacted to it. You think there will be oppositional structure if we do drill down? We don't need to anymore. Probably. Right? Let's drill down on the 4. Not on the 4s, but ooh, what does that look like? Sure looks like a continuation pattern. Looking suspicious there, continuation pattern. And look at that correlating. Let's get down to the 1s and make sure there's some red candle pushback. Oh, there it is. A fight between buyers and sellers where buyers won. Isn't that cool? So if you had done this before price had come back in, then you would have placed your entry there. And I just want to just for fun, I just want to zoom in here. Where did price turn, guys? Where did it turn again? How's that? Isn't that cool? Welcome to the wonderful world of trading. That is what you call nice, tight structure. Doesn't get much tighter than that, right? Oh, come on, man. There you go. Close enough. No, not much of a rally. Pretty good rally, man. Because you would have traded it up to this level right here. And if you trade it from here to here, don't forget, it's a tighter zone, right? So if you took this entry right here and you traded up to that supply zone right there, because that would have been your target, and you had your stop loss right here at the bottom of the zone, you're looking at a 5.78 to 1 reward to risk ratio. Now, would I have taken this trade? I don't day trade. I rarely day trade, guys. But for those of you who like day trading, this is the type of stuff you should be looking for. That's what she said. Isn't that cool? Well, it's a funny thing you say, Bob, because one of the most common sentiments I have from people after they learn to trade, and this is, I'm not joking, this is one of the things I hear the most is, trading's easy. It's like, oh yeah, is it easy? Once you learn to trade, then it's just something you know how to do, you know? But it does take a while to get to that point. I remember when our secretary said that to me. She had been trading for about a year and a half. She'd been doing she'd been focusing on futures trading. And she knew how to trade. Like, she knew how to do analysis. She had a really hard time controlling, like, FOMO. Like, you know, missing out on trades, stuff like that. Like the number of times I would walk into the club, guys, and she would get there early because she was a futures trader, right? And I'd walk in and she'd be like, I already hit my profit target for the day. And I'm like, oh, awesome. So you're done. Like, that would be my instant reaction. I'd be like, so you're done for the day. You don't need to trade anymore. And I think at that point, her profit target was like $200, $300 a day. That's what she was going for, you know? And it was always funny because she'd be like, there would be like a pause, you know, and she'd be like, yeah, I'm done. Like, that didn't sound overwhelmingly confident. You know? And she'd be like, no, yeah, I should just stop, right? And I'm like, well, if you hit your target, then that would make sense. And then a couple hours go by, I'd walk by her desk. What do you think she'd be doing, guys? You think she'd be sitting there just happy with her returns for the day? What would she be doing a couple hours later? Right back on the charts. Trading again. And like the number of times where she would say like, I should have stopped. Now I lost some of the money I made this morning. I'm just trying to make it back. And I'm like, oh, great. And it's just extraordinary, man. That emotional aspect is a big part of it. And you know what actually helped her? Prop firm. That was what helped her. That was what helped her get over the hump. Was she got funded through a prop. It was through Apex is what she used. She got funded through Apex, and Apex limits the number of trades or position size or whatever that you can take. Like, they make you follow risk management parameters. And so, like, she would have the same situations where she'd be like, I hit my target. She's like, oh, man, I hit it, but I can't trade anymore. It doesn't let me trade anymore. I've hit the number of trades I can take for the day. And I'd be like, great. Then you're done. And so she'd be like, yeah, but I mean, it's so annoying. I wish I could trade more. And I'm like, no, that's good. It's teaching you risk management parameters. It's teaching you the rules of trading, you know? It's forcing you to follow the rules because she already knew the rules, but it was forcing her to follow. And that little thing of her not having a choice was the difference between her becoming an occasionally profitable trader and a consistently profitable trader. That was it. The fact that Apex handcuffed her and limited her made her a better trader. And then I remember 3 months later her telling me how trading was easy. You know? And I was like, oh, is trading easy? Like, how long did it take you to get here? And she's like, oh yeah, I guess you make a valid point. I'm like, yeah, it took you a year and a half to get to this point. Now that you finally are following the rules and you're consistent, now it's easy. Now you find it easy, but it wasn't easy at the beginning. Miles, yes, if you're a consistent trader and you need funding, right? That's the benefit. So if you need funding, if you don't have enough capital to trade with, and you're a consistent trader, then they can be great. I don't know, Sam. I've never used it. I know a lot of people that use it. I've always only heard positive things, but again, I've never personally used Apex. If you ask in the chat, I think there are a bunch of people that use it. Because I know we have a bunch of members that are funded with different props, so you can ask them about the time of payout. But she never said anything negative to me. I know we have one guy who's like, I think he's funded like 800 grand with them. That's all he does. He just uses them for prop. Yeah, then why wouldn't you use it? Helps you build up your account more quickly, Kevin. I mean, you guys got to think, like Blue, when he first started trading, when he got to a point of consistency with his trading where he was really good at it, he was good, he was consistent, but he didn't have a lot of capital. So he actually went and worked at a prop firm, like at the firm on the floor in New York for a couple years because that allowed him to build up his account much more quickly. I'm not a fan, JT. I don't like any indirect access broker, so it's not specifically Webull. I just don't like any indirect access broker because you're paying more in hidden fees than you would normally pay. Oh, so do I, Smarta. I think it's fantastic. But you know what's funny? She could have been there quicker. If she had more discipline with her trading, she would have been there quicker. It was just that part was a big part. It was so funny because she knew it was wrong. She wasn't like, I don't know these rules. She was like, no, she knew the rules and she would break them every day. Every day she would break them even though she knew she wasn't supposed to. That emotional aspect for a lot of people is one of the hardest parts, you know? Because if she was up 300 or 400 bucks, she'd be like, but what if I was up 500 bucks? But what if I was up 600 bucks? Like, that's the way she would think about it. She wouldn't think like, oh, fantastic, I hit my target for the day, done. She would think like, but maybe I can make more. But maybe I can make more. But maybe I can make more. And it's like, dude, you know, like you did what you were supposed to do. Now, if your target adjusts, great. But that's something you do once you're consistent with a target and hitting it consistently, then you can adjust to higher targets, you know? But that aspect of the over trading, I don't want to miss out on more trades. Oh man, the number of times she would tell me like, I missed this one trade on ES I could have taken. Oh, I'm so unhappy about it. You know, it's like, why? There's always another trade, man. Oh, 100% T. How much more you could have made, right? Be happy to hit your target. Hit your target, you made money. Good. Yeah, Bob. People do it all the time, man. It's the nature of it. It's why we have this trading psychology as part of the coursework. It's not for fun. It's because it's very important. It's a very hard part of it. Anyway, what else do I have on State Street? Got a whole lot of nothing, man. I mean, I'm not going to take that supply zone there. That's a big wick supply zone. This is all chop, right? This one's already been hit. That was your last trade. Your last actionable trade was this little guy right here. Right? Because we're not going to trade this little supply. We're not going to trade this one. That's already been hit multiple times, right? Look at how many times we've hit this thing. In, out, in, out, in, out, in, out, in, out. Like, we're not touching that thing. We're not trading this one, which is this big giant wick. There's just nothing here for me. That was your last actionable trade on State Street, was this guy right there. Now you got to sit in your hands a little bit. This is what I'll tell you guys. Some things only come with time. Sometimes you need to make the mistake enough times until eventually you go, let's not make that mistake today. You know? Sometimes it's just a matter of exposure. As Green sometimes likes to put it, sometimes you need to be slapped across the face a few times until you finally learn the lesson. That's just the reality of it, right? Some people need that. Most people need that. Not even some people. Most people need a few slaps across the face. Yeah, 100%, man. That's a big part of it. Very important to trading. Risk-reward ratio and position sizing are two of the most important aspects of trading, guys. That is trading in a nutshell, right? All right, let's do one more, and then I'm going to eat some lunch, guys. I'm going to go get some barbecue somewhere. My checks are black and blue. If you're getting nothing but slaps, well, Jeff, come to the workshop. Come learn to trade more. We'll teach you more about it. By the way, guys, don't forget, workshop, Thursday night, 7 p.m. Eastern. If you want to learn more about trading at a professional level, you can register for free on our website, TradePhantoms.com. And in that workshop, we will do a deeper dive on all this stuff, guys. We'll teach you a lot more about how professionals trade and analyze in the market, how we identify institutional order flow, where the banks buy, where the banks sell, so we can buy and sell together with them, how to trade in all directions, how to use leverage properties so you can reduce the amount of capital you're trading with, reduce your risk, generate higher rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about trading at a professional level. And for those of you interested in becoming Trade Phantoms Pro members, we have that special discounted rate for new members if you're attending for the first time. And for those of you who asked me to send the discount code, I just have to turn it on the website. Just send me a DM if you want to jump into class tomorrow, Monday. If you want to jump into class Monday with the new members, because we have class for new members starting on Monday, you don't want to wait till next Thursday. If you've already been watching us for a while and you already know you want to move forward, send me a message. I'll send you the promo code, all right? Apple US 30. Let's go look at Apple. Let's see if I can do two. I'll do two really quickly. Let's just do it that way. Let's clear the charts, start from scratch. Yeah, I have demand. No, I don't have supply. Down on the weeklies. Maybe Angel. I still have a lot of unpacking to do, my man. So it's going to depend on how I feel is the best way I can put it to you. If I feel good and I don't feel tired, I have zero problems with it. If I feel sleepy or something like that, then probably not. All right. Impulse, balance, impulse, area of institutional buying. Impulse, balance, impulse, area of institutional selling. What's my problem with this demand zone? It's already been hit. Impulsed out, came back in, hit it first time, popped back up. What's my problem with the supply zone? Realistically, already hit. Can you see how we just hit it right there and just popped out a little bit? So just something to take into consideration, because this is a gap down, right? And then a retracement. Down to the dailies, what I'm looking for on the dailies, and I'm, of course, where is this gap from, guys? What is causing that gap? Big, massive supply, but it is a retest of this impulse balance, impulse continuation. And this, who was asking me about trading with earnings? That's how you trade with earnings. Back into an area of an order flow, multiple time frame correlation with earnings coming out. I go through all 28 currency pairs BBB, and then I go through my watch list for equities. What's up, Super Dave? Beautiful day, my man. Beautiful day down here in lovely Austin, Texas. I don't know, brother. I'd have to look at it, Jeff. That's how you trade through earnings. Does that make sense? I'm not going to trade through earnings as a standalone form, but if I'm in an area of order flow when earnings is coming out, that's very different. That's an interesting area for me. Nice, JL. Essentials is critical, guys. If you get essentials down, that means you have a strong foundation. Very important. A lot of people have passed their prop firms just because of essentials, so very valuable to get that stuff down pat. I can't emphasize enough how important that stuff is. But that's the exact type of structure where I'm looking, where I would be interested in trading with earnings. Now, based on what happened, what would you think this earnings report said, guys? Would you think it was a good earnings report or a bad earnings report? Big, massive drop down. What would you think? Good or bad earnings report? Well, no, don't cheat. Don't look at the green. I'm saying price dropped down dramatically. What would you think the earnings report was? You think, oh no, terrible earnings report. It must be awful. Nope, it was positive. It was a good earnings report. It Everything was beautiful. Why did price drop? Why, oh why, did price drop? If earnings was so good, why would price go down? Yes. And you know what's interesting about this very, very specific situation? Whose UFOs? Because in this particular case, we actually know who. We don't normally know who. But in this case, we know who. Who was taking profit? The Oracle of Omaha himself, good old Warren B. Taking some profit. It's almost as if he plans his profit targets ahead of time, guys. It's almost like he plans this stuff out. Like where he says, when price gets to this level, we're going to take some profit. It's public record because it came out in their filings, man. They're a publicly traded company, so the filings came out, showed that they sold position. Isn't that cool? We don't always know, right? But in this very specific circumstance, we know, right? And we can see that they were already selling, taking profit here, selling, taking profit here, right? Now, this is an even more interesting question. Why would Warren Buffett be selling, first of all, at all-time highs, and when an earnings report came out that was positive? I'm usually in like 3 to 4 a week, BBB. Less than I used to. Why would he be taking profit all-time highs, guys? Yeah. To make money. Isn't that the point of why you trade? To make money? Isn't that why people do it? And also, exactly right, Black Wall Street, what's the biggest challenge Warren has when placing his orders? What's the biggest challenge? Liquidity. Liquidity is the biggest challenge for big bank. And Berkshire's massive, right? They have huge amounts of money. So if an earnings report is coming out and the earnings report is positive, what do you know retail traders are going to do? What are retail traders going to do when they see that positive earnings report with their YouTube level of knowledge of trading? They're like, oh my God. They beat surprise in terms of revenue and earnings. It's time to buy. I swear, I'm pretty knowledgeable about the market. It's time to buy. What's Warren doing? What a great time for me to sell. Lock in that sweet, sweet profit. I bought way down there. I love making money. Locks in, sells. I'm going to be able to sell way more of my position right now because all these retail traders are going to be chasing that price action. So I'm going to be able to unload more than I normally would because of all of this extra liquidity from all the retail traders. But eventually, Warren's a bigger player than you guys are. So eventually his sell orders outweigh your buy orders and price goes down. And then all the fundamentalists, what do the fundamentalists start doing? They start trying to justify in their mind, why would Warren, does he know something about Apple that we don't know? Maybe something's going on here, guys. Is this a reason? And you see all these morons write their articles about why perhaps there's an issue with Apple that Warren Buffett knows about that we don't. He's just taking his profit, dude. It's like, does anybody ask why Walmart sells the TVs that they buy at a lower price? Or they're like, why did Walmart sell at that higher price, that TV that they bought at the lower price? Very suspicious. Do they know something about Sony that perhaps we don't know? No! They're making their money. Profit. That's the whole point of this. But I love these speculators. Do you know how many articles came out on people speculating why Warren Buffett was selling his position? Why would he want to make all this money selling at all-time highs? It's so strange. It's like, yeah, crazy stuff. There you go. Yeah, there you go, Sam. All right. Anyway, all right. I'm done. I'm done for today, guys. Workshop Thursday. If you want to come to the workshop, come check it out. I'll teach you more about trading. If you want to actually learn, then that's a good way to do it. It's free, costs you nothing but some of your time. You can actually learn more about how professionals trade. We'll get into all this stuff, guys. How the markets really work, how we identify order flow, where the banks buy, where the banks sell, so we can buy and sell with them, how to trade in all directions, how to use leverage so you can reduce the amount of capital you're trading with, reduce your risk, generate higher rates of return, the difference between all the different asset classes, stocks, options, futures, forex, crypto, what they're best suited for, and trading for income versus wealth management. So we'll teach you a lot more about it, and if you're interested in becoming a member of Trade Phantoms Pro, if you actually want to learn how to trade and have us mentor you and trade live with you and teach you how to do it, you will have a special discounted opportunity to join Trade Phantoms Pro. All right? Thank you, guys. Do you live trade in the AM? Yes. Just register for the class. Awesome, Jeff. I'll see you there. Thank you, guys. Everyone have a wonderful rest of their day. That is it for me. This is Mr. Black signing off. Take care, everybody.